ownership allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Petty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5. Urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. Research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Viksit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple Corridor and Mahabodhi Temple Corridor will be supported, modeled on the successful Kashi Vishwanath Temple Corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists, and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi, or the 7 hot springs, form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship-related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I'm happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of customs duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals, steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, More than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and tedious. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% tedious rate on many payments is being merged into the 2% tedious rate, and the 20% tedious rate on repurchase of units by mutual funds or UTI is being withdrawn. Tedious rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise and service tax in the tax tribunals, high courts and Supreme Court to 60 lakh rupees, 2 crore rupees and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Item number 2.
Okay, no relief if you're an investor. You pay high capital gains, and you can see the mid-cap index nosediving 2% and the Nifty nosediving 1%. But relief for all of us, 17,500 rupees by way of taxes. I think the Finance Minister is speaking again.
Budget Management, FRBM Act 2003, medium-term fiscal policy fiscal policy strategy statement, and macroeconomic framework statement.
Item number 3.
Sir, with your permission, I rise to move for leave to introduce the Finance number 2 Bill 2024.
प्रश्न ये कि विधेयक को पूरा स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें।
Okay, well, that is the Finance Minister. The budget is done, and I think the big news, of course, is taxation on equities, capital gains, taxes being tinkered with. The long-term tax has moved up from 10% to 12.5%. The short-term rate has gone up from 15% to 20%. And I think that is essentially, from a market perspective, the big headline. I mean, you know, before the Finance Minister reached that tax section, the market was holding with just about a 50-odd point cut on the Nifty. That's gone straight to for the Nifty to be down about 300 points. I mean, lots of changes as far as taxes are concerned. You know, for the startup world, there is the angel tax, which has now been abolished. And there are many other changes which have been done. But I think the one sort of news point from a taxation perspective, which I think straight off the bat overshadows pretty much everything else right now, is the fact that you know, equities capital gains taxation has been increased both on the long term and on the short term as well. And I think there is, of course, on the futures and options income, futures and options side, STT, which has also actually been increased. So, after the economic survey yesterday, there was anticipation on the F&O side and, some of the anticipation with regards to capital gains tax on listed equities that had faded away a little bit, but has come back in a big way. I would say this is, a very, very large tax budget more than anything else, with lots of changes on, direct taxes, lots of changes on the customs side, indirect taxation, and much more as well. 350 points down on the Nifty now. So that's the kind of cut that we're seeing. At this point, the market, of course, reacting in a pretty large way. This is a knee-jerk reaction, but I think what was the market's fear has come through. 24,190 is where we're at on the Nifty. Shireen, you've been talking. Sorry.
To be fair, there has been a little more money put in the hands of taxpayers as well.
Yeah.
But I think the market at the moment is only reacting to the fact that market gains are going to be taxed and taxed substantially higher.
Yeah.
15 to 30% to 20% is 30% more amount in terms of
Though
amount
that
of money.
exemption of 1 lakh that we had on long-term capital gains, that's been increased slightly to now
To 1,25,000.
but
That's
not too much.
marginal.
The big
it is a very big takeaway from the markets, and the markets are reacting. To be fair, they were also sitting long, and therefore some bit of a correction. Buy on news, buy on rumor and sell on news was always there, but this is something very big for the market. Shireen, anything more with you?
Yeah, Lata, outside of what we've already discussed, which is the changes on the capital gain side as well as F&O and so on and so forth, I think the fine print will have to be looked at, and we have our tax panel here with us. I think the larger message is the message that we've been pointing out to here on CNBC TV 18. I said very clearly that there is going to be no departure as far as the fiscal math is concerned. What was industry saying? That the government capex number has to go up substantially. What has the finance minister delivered? 11.11 lakh crore rupees, exactly the same number that was there in the interim budget. Similar story playing out even as far as the rural allocation is concerned. So there has been no deviation, no departure from the fiscal arithmetic as far as the interim budget was concerned. Good news on the fiscal deficit, again something that we had reported, 4.9% is the government estimate now as far as fiscal deficit is concerned. So making it clear they are sticking to the fiscal consolidation roadmap. But there is a lot in this budget, Lata. A lot of it is work in progress. The energy transition framework, the employment schemes that the government has put forward. Many of those 9 priorities continue to be work in progress, and of course allocations will have to be looked at in the fine print and so on and so forth. But let's bring the tax experts in on what they make. This was being speculated whether this is going to be the budget that finally moves as far as capital gain simplification is concerned. Dinesh Kanabar, Ashok Vadva, to you first, your reactions on what we've heard from the finance minister. Ashok, to you first.
Obviously, the increase in capital gains tax on listed securities is a bit of a disappointment. We were all hoping that they will keep it intact and retain market buoyancy. But I guess, as the economic survey had mentioned, government wanted to make a move. The distinction is that they're trying to save for the smaller person. In other words, the lower middle class, they've increased the exemption from 1 to 1.25 lakhs. They've increased they've reduced the tax rates. So in a sense, they have provided some comfort there. But obviously, to the market participants, it's 10 going to 12.5, 15 going to 20 on listed stocks. Only partial good news is that they have therefore brought on the unlisted securities, they have brought the capital gains tax down. So where we were taxing long-term at 20%, that will come down to 12.5%. And where we were taxing short-term, 25 or 39, depending upon whether it was a corporate or an individual, they've brought it down to 20%. What we don't know is what they have done with real estate, because that didn't come out very clearly in the messaging. So that's unfortunate, but as I said, par for the course now.
Okay, and what about you,
Yes, and
Dinesh?
we will have to look at the fine print on that. Yeah, Lata, go ahead.
No, I was just going to ask Mr. Kanabar, what were the big takeaways on tax?
Quite a few things. Angel tax going away will mean that huge amount of money which was coming in, and we are seeing some horror stories. Although there was a lot of liberalization in the recent part, but still there were horror stories. Again, buyback tax, and we discussed this just before the budget was presented, that be careful what you wish for. So it's not being treated as capital gains. It's going to be tax in the hands of the recipient, which would mean that it could actually, in the hands of larger taxpayers, mean a larger share of tax being paid, because it will be taxed at a full rate. So that's what's going to mean. So it's for lower income people, it's going to mean good. For those who are at a higher tax bracket, it's going to mean higher taxation.
The arbitrage between dividends and buybacks in that sense also goes away.
Goes away, absolutely. Absolutely.
Well,
Except Dinesh, what if, I mean, are they going to tax buyback on long-term holding as capital gains, or the tax? Because if they are going to tax it in the hands of the individual and it is then taxed as capital gains tax, then the 20 comes down to 12.5. Because today the company is paying a tax at 20%.
I don't think she said that. We have to look at the fine print.
I know, but if it's going to be taxed in the hands of the individual, it has to be taxed in the individual as the character.
Yeah.
And if the character is long-term, it doesn't matter whether you buy it or the company buys it. If the character is long-term, then it will be 12.5%. So then there's a gain. Okay. The company was paying 20, the individual would be paying 12.5.
Ashok, as Lata says, we have to see the fine print.
Yes.
You're right, actually. It's not long-term or short-term, it's the characterization. So if the characterization is capital gain, then obviously whatever is the capital gains treatment will apply. If it is treated as normal income, then we have a challenge.
Okay.
So we'll have to examine.
You know, the budget papers are still not loaded.
Yeah.
So we will wait for more clarity, and you guys, I guess, will be on your phones till you get that clarity. But let's get to the market expert. Madhu Kela of MK Ventures joins us now. Madhu, okay, we also have Sunil Singhania of Abacus Asset Management, more experts joining us shortly. Madhu, first thoughts, the market's worst fears realized with short-term capital gains going up to 20%. Yes, Madhu.
Lata, I can't hear you properly.
Okay, it's just that STCG gone up to 20%.
Yeah, I think this is completely not in expected lines. I don't think any market participant in that sense was expecting a change in the short-term capital gains as well as in the long-term capital gains regime. And also the STT is being actually increased. So, and the buyback taxation, if it is moved from company to the individual and there is no charge to the company, then it will be incrementally positive. But by and large, to me, in a lighter sense, looks like the market wants the markets to cool off. The government wants markets to cool off. You know, while the fiscal math was all adding, you know, this was not the basic expectation of the taxation increase. And already, Rata, markets have run off very hard in the last few months. So some kind of a correction because of this is not overruled, and that is what the markets are showing off.
Well, the markets have recovered coming off those intraday lows. But let me bring Sunil in. Sunil, Madhu is saying the market wasn't expecting this, but the speculation was rife, especially over the last few weeks, that something has got to give as far as the capital gains regime is concerned. It has now been put forward in the budget, and of course, fine print is awaited. Sunil, your first reaction to what we've seen the finance minister deliver?
I think the market reacts based on expectations and what actually comes out. So I would tend to agree that there was hardly anyone who was expecting any change in the capital gain regime, at least in this budget, because we are only 6 months away from the next budget, right? So I think to that extent there has been a disappointment. And the other thing is uncertainty on this buyback tax. Because the intention of the finance minister maybe was that dividend tax and buyback tax, there was a difference in tax treatment, and buybacks were getting maybe a slightly more benefit in terms of lower taxes. So we have to see the fine print, but obviously when something is not expected, the market definitely reacts. And anyway, I think over the last 10-15 days, market was showing signs of cooling off, at least the broader market. So while the Nifty was not showing signs, the broader markets was clearly showing signs of overheating. So it's a combination of two factors, I would say.
That the fiscal deficit has come down arithmetically to 4.9. So at a macro level, that is a positive, but that doesn't mean they're going to borrow less. The borrowing was originally 14.1. That's just come down to 14.01. So they're going to borrow the same amount of money, but yes, For the arithmetic, it's 4.9. Go ahead, Prashant.
Absolutely. I mean, look at don't lose sight of the index, the market as well. We had fallen about 400 points on the Nifty, and it's a 250 odd point recovery since. So, is going to be as powerful, a recovery as we've seen after the election shock? Some have, of course, said no. But this is too early. I mean, this is the first knee-jerk kind of reaction which is coming in, and I think it'll take time for it to kind of sort of seep through in markets to find an appropriate kind of level. Prashant Khemka is also with us. Prashant, I'm going to come to you. Madhu, but what is your sense? I mean, as I said, this is immediate kind of market reaction, but is this going to do slightly more lasting damage? Or, as you said, government wants markets to cool off. Will it cool off?
I do not think it will be a lasting damage or anything of that kind, Prashant. It doesn't change the medium and long-term outlook of Indian economy or the stock market per se. I think the government in other sense has done quite a lot for agriculture, for job creation. There is a lot in the finer print. They have retained the capital expenditure as budgeted in the interim budget. See why there is a knee-jerk reaction, because this, at least I was not expecting, because see, when we went into the budget, in 30 years of my career, I have not seen a better financial position of any government or any budget which being presented, when because of the RBI dividend and because of the higher taxation, the government fiscal situation was really in a very sound path. So this was not expected. There is some knee-jerk reaction, but I don't think it changes any trajectory or it will bring in any meaningful correction in the market just because we have slightly higher capital gains taxation.
Okay.
Sunil, you want to sort of come in on that point? I mean, today the reaction is the reaction because it's a surprise, but do you think we'll have a sort of lingering kind of impact, or the market just moves on?
No, so if you go back, Prashant, when long-term capital gains tax was introduced, to 10% from 0%, we did have an impact in the market. But then the market started taking it on its stride, because ultimately you're paying capital gains on the gains you are making. So I would agree that at least on this point, the market will take it on its strides. But there are a lot of things which we have to understand, whether there will be a grandfathering like the ones which we did earlier, or is there a date from which this is going to be applicable, whether it is going to be applicable from day one, or whether, it's going to be applicable after a month. So if that would be the case, then there would be obviously some pressure because investors would like to book their gains at lower tax rates. So I think let us see the fine print, but I think the markets were clearly overheated and some cool off for some reason was necessitated. And basically, maybe this is the reason why markets would cool down a little bit. So I would say that it would not sort of collapse per se. Maybe they will spend some time here, but I would not expect either a big correction or a V-shaped recovery.
Okay. And any stock preferences, sector preferences, Sunil, after you heard the budget, any stock sector preferences?
I don't think there is anything, which is sort of a surprise as far as positives or negatives in the budget is concerned. I think we were all expecting a focus on infra to continue, focus on housing, obviously focus on giving more to the middle class, which they have done by way of reduced taxes. So I think everything has been online. I don't think, except for some minor tweaks here and there in terms of import duties, it's the same as it was earlier.
Okay. Thanks for that, Sunil.
Let's bring in Prashant Khemka as well. He's waiting by.
That's what I was
And he manages a lot of foreign money. Prashant, good to have you with us here. From an attractiveness point of view, purely on a taxation regime basis, how does this capital gains tax increase count, I mean, in your opinion?
Certainly, Prashant, like every budget, it has some puts and takes, and maybe from an investor perspective, this budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short terms raised to 20, but this increases the risk in investors' mind that it could be not a a given tax regime for next many years. It is possible that this could be inching up higher again at some point in time. So that I would say is negative, but that is the primary negative of the budget. There are several positives as well,
Sure.
most particularly on the review of the tax code, which hopefully would simplify and make it easier to comply with.
Okay. Prashant, hi. Thank you for joining us on the show. So this, of course, is the knee-jerk reaction that we're seeing on the markets right now. And it has come as a negative surprise, and hence the market is factoring in. But, as Sunil was also mentioning a while back, this may not change the medium-term outlook for the market, because at the end of the day, you are paying capital gains tax on gains in the market, which have been aplenty over the last many years. So if this dip continues because of the reaction to these changes, would you suggest a buy on dip strategy is a good approach? I mean, would you buy the dip that we're seeing in the market right now?
So certainly taxes are on gains only. I mean, you don't, on the other hand, you don't recoup anything on your losses. So, net, it is hard to paint it as a positive. But on the knee-jerk reaction or not, yes, I mean, taxes, I don't think ever have had a lasting impact. As Sunil and Madhu pointed out, and we all know the markets have been somewhat of a heady, progression over the last 2 years, up 60%, 2 years up 30% or so over the last. These are not like normal returns from the market. So, regardless of the budget, one could have reasonably expected markets to be more normal going forward, which is deliver high single-digit, low double-digit returns. So this would not, whatever reaction the market has to have to this tax would be done either today or by tomorrow. Regardless of market reaction, I think the point remains that the expectation was not there of a capital gains hike without indexation benefit in this budget.
Yeah, no, absolutely. I'm going to come to the tax experts as well, but I think Madhu, you want to make a point?
Yeah, Prashant, I just got a message, I hope it is right, that this capital gains taxation calculation, as Sunil was saying, is on a prospective basis and it is not applicable to securities held before this budget announcement today. So whatever you buy after today will be applicable on a long-term capital gains and short-term capital gains. So it is some relief. It is not applicable, hopefully, to the shares being held before this date.
That's.
I hope this message is right.
No.
I'll pray for it.
We will.
It is right.
No, I think everyone will prefer it. It's on a prospective basis and not a retrospective basis, and we'll sort of look at the fine print in just a bit. But I think Nilesh Shah is also with us. Nilesh bhai, okay, I think we'll just go to him in a bit. Ashok, the point about prospectiveness. I mean,
historically, it's always been point of sale.
Yeah.
So if you go with the point of sale, it doesn't matter whether you bought it before or after. I would believe that consistency is unlikely to have changed.
Okay.
But let's look at the fine print. I mean, who knows? They may have just brought in a specific. But Dinesh will make an important point on dividend. I had said that it's likely that buyback could be treated as capital gains. That clarification has come. It will be treated as dividend.
So they have actually specifically amended the law to say that any buyback income will be treated as dividends. And therefore, virtually it kills buyback because for higher income it doesn't.
And so it's treated at the slab rate.
Absolutely. I'm seeing quite a few. I mean, too early to comment on all the fine print, but as I was going through, one of the things, for example, in the pharma industry, we see is that there are litigation on infringement of patents and things like that. And then you do a settlement. Now that settlement payments are treated as non-deductible because it is treated as infraction of law. So it's a number of fine prints. I could see quite a few things.
Okay. We'll come to that. At the moment, the market is kind of recovering from the big blow. It was down about 3%, the mid-cap index in particular. Now still down about 1.3%, but I think people are more playing profit booking or profit taking, as the case may be. I think we will have to give it the budget that it has tried to ameliorate some of the important long-term work. For instance, trying to encourage corporate apprenticeship of newcomers. You know, the benefits that they're providing if you hire new employees. I think up to 1 crore youth could benefit. So there are these long-term benefits. Macroeconomically, the deficit is down. Maybe in the days to come, that would mean a rating upgrade for India because we are rapidly bringing down our fiscal deficit. You cannot take away from these macro positives in terms of what is done for employment and what is in terms of what is done for you know, macro health of the economy. But at the moment, we are focused on the capital gains, and therefore the market is reacting the way it is reacting. Well, Madhukela, any sector preferences at this point in time after what you heard in the budget?
Yeah, Lata, is life back to normal in my view. I think this is you know, now these days budget do not have a more than 48-hour lifeline, and because the reforms are carried throughout the year, I would continue to you know, focus on bottom-up stock investing opportunities. I think agriculture could be one interesting sector to look at it. One will have to read the fine print, but there will be some beneficiary on the agriculture sector and also on the broader economic front, because they have retained the capital expenditure plan which was being outlaid in the interim budget. So Lata, it will be a story not of a real any big sector, but bottom-up stock picking going forward.
Yeah, you know, I just want to come in here and bring Nilesh into the conversation as well. And while we're talking about the negative impact of the tax announcements that have come in, there have been many positive announcements that have come in as well. Abolishing the angel tax, which is a big one for the venture capital and the angel tax community for the startup ecosystem. The equalization levy, by the way, has also been done away with it. What was popularly called Google tax, that's been done away with as well. There is a TDS cut even as far as e-commerce platforms are concerned. So there is a lot actually on the tax front, and of course the benefits to taxpayers, to the salaried class, if they move to the new tax regime. The finance minister holding out a number of about 17,500 rupees by way of savings. But Nilesh, on balance, as far as the big numbers are concerned, you know, it's the same. It's pretty much status quo when we talk about capex. When we talk about capex, when we talk about the rural spends, etc., food subsidy, that number flashing on our screens, and of course we will go over the fine print of many of those schemes that were announced. By the way, the MSME scheme, and I think the bank stocks reacted to that as well, because this was a proposal, this was a demand made by the MSME sector in terms of credit guarantee and especially not counting them as an NPA when they were SMAs. So there's been plenty that's been announced as far as the SME sector is concerned. But let me go across to Mr. Amitabh Kant as well. He joins us now for the first reaction from the government's end. Mr. Kant, always a pleasure. Many thanks for joining us. The budget is now delivered. There's plenty there on the tax front. Some of the concerns there with respect to long-term capital gains and the changes that have been announced. But on balance, the message is one of continuity. The message is one of macroeconomic stability. Your first reaction, Mr. Kant?
So, Shireen, I think the focus really is on growth with huge emphasis on employment. I think the important thing is to, you know, if, as the economic survey said, if you have to create 8 million jobs a year, these new schemes on employment, you know, that first-time employees to get their 1 month's salary, or the second one, you know, both employer and employees to benefit, you know, and secondly, you know, from their EPFO account, and thirdly, for the employers again to benefit. So, and then a new scheme for skilling, the centrally sponsored scheme for skilling, and to my mind, this internship with about 500 top companies. All these are path-breaking measures to my mind in terms of employment. But the other big thing too is the focus on urban development. You know, creating growth centers next to 100 cities, creating industrial parks next to, you know, the 12 industrial parks. Because if you want to create good quality jobs, it's not through subsidization. That'll come through manufacturing and through urbanization. And that's that's very important. And the third is, the focus on energy transition, which is very important. And this emphasis on pumped storage, for which, to my mind, there's huge potential. And small modular reactor, because these are cutting-edge technology where India has to leapfrog. And, this doing away with angel tax for startups is again a path-breaking move. So other than the stock market may look at the tax on the long-term investments, etc., stock market, but from a perspective of growth, from the perspective of employment, from the perspective of research and innovation and urban development, it's quite a remarkable budget.
Yes, we will have to see the fine print of those schemes that were announced specifically for employment. The good news is that they have linked that to the EPFO enrollment for the formal sector. But Mr. Kant, two questions I have specifically for you. Yesterday, the economic survey made it very clear that, look, corporates are sitting on record profitability. Corporate profitability has quadrupled in the last 3 years, and it is now time for the private sector to take up the baton. And if you look at the capex number, the ask and the expectation was that the government needs to do better than the interim budget, but that's not the case. It's status quo on capex. So the message that the government seems to be sending out is, we've done our part and now the private sector needs to pick up the pace. But in that transition period, do you envisage some hiccups on growth, Mr. Kant?
So, Shireen, taking it from 1% to 3.4% is a huge amount. And if you look at it, the government in the last 3 to 4 years has really pushed all its resources into capex spend. And to my mind, it continues to do that at 3.4%. But it's also time now for the private sector investment to kick in a big way. And to my mind, that was impacted because of the COVID, but it has started kicking in and it will drive greater impetus with this budget. So I envisage that in the coming years, in a lot of sectors, particularly the PLI-related sectors, you will see a lot of fresh investments coming in. And I don't think we need to worry on that count. The government has really done its best. To stick on to 3.4% capex itself is a very huge thing, and yet to bring down your fiscal deficit to 4.9%. That, to my mind, is a remarkable thing, that you are saying 4.9%, you will bring it down to 4.5%. You are really laying down the glide path for the fiscal deficit in the budget, which in the long run is very critical for the Indian economy.
Mr. Kant, a valid point that you make there. I will address the PLI issue with you in just a second, but let me get Madhu Kela back into the conversation. Madhu, from a consumption point of view and the changes that the government has brought in to try and provide some sweetness to and some relief to the salaried class, what do you believe that that's going to result in as far as the consumption cycle is concerned, if anything at all?
I think it will argue very well for the consumption cycle. Serene, any which way we are coming off from a 2-3 year kind of low, wherein because of inflation concern and because of unemployment concern, there has been some kind of a consumption slowdown. And in a way, market is validating. If you see the uptick in a lot of consumption-related companies over the last 1.5, 2 months, a lot of companies have gained ground. So I think this budget as a whole, if there was really no tinkering of this short-term and long-term capital gains, I would think markets would have really celebrated, because there is, as Mr. Kant was saying, there is a lot of positives in the budget and there are a lot of positives in the fine print, and the unemployment issue is really being addressed as much as I could hear and understand. That there will be a lot of job creation opportunities for the youth going forward, which will argue very well for the broad-based recovery of the economy and also of the consumption-related sector going forward.
Gentlemen, just for the benefit of all of our viewers, you had asked for that clarification. Sunil had asked for it, or I think Madhu specifically. The STT hike is effective from the 23rd of July. So basically, it's effective from today. The hike as far as the securities transaction taxes, the STT hike has come in from the 23rd of July. I would imagine that's the case for some of the other tax changes that have been announced as well. So that's the clarification coming in, effective the 23rd of July. But Mr. Kant, coming back now to the measures as far as the manufacturing sector is concerned, and I guess you will need to see this holistically in light of what has happened on the customs duty side, in light of what has happened on the announcements on the industrial parks, MSMEs and so on and so forth as well. But the expectation was more PLI schemes would be introduced, especially for labor-intensive sectors. That's not been the case. Your comments on that?
So I think the best thing, to my mind, Shireen, the Finance Minister has done is not to spread the PLI thin. An important thing is that the PLI is meant to create large champions, big champions, and PLI should be limited to 14 sectors. We must ensure success, as we've done in the case of electronics, in the other 13 sectors. PLI should never be spread thin. That is not a long-term solution. The long-term solution is to make India a very highly competitive nation. It should become very easy, simple. It must become the most cost-competitive nation in the world. That is what the budget aims at. PLI is meant for 5 years if you go big, bigger, bigger, and biggest. But it's not a solution for inefficiencies. The government is trying to address macro inefficiencies in our economy. We must get that right. And therefore, I'm really, really grateful to the Finance Minister that she's not spread out the PLI thin.
Mr. Kant, coming back to you in just a second, sir, but we do have more clarifications with regards to the capital gains tax. Lata, the fine print, what do we know now?
Yeah, there was an understanding, and I want Madhu Kela to listen in to this. There was an expectation that the short-term capital gains increase will only apply to shares purchased hereon. Dinesh Kanabar clarifies, no, it applies to all shares that you hold, and it will apply from whatever sales you do from today. Mr. Kanabar.
Actually, the entire income for the year will be taxed at 12.5%. So it's income arising after 1st April 24. Okay. If you have made a long-term capital gain, the rate will be not 10 but 12.5%.
And likewise for short-term
as well.
Absolutely.
And on real estate, Mr. Kanabar, can you just...
The period of holding has been reduced from 36 months to 24 months, which again is a very... I think what the Finance Minister has done is she has taken the suggestion of simplification very seriously. So instead of having multiple holding periods for multiple class of assets, she has put financial asset on one side, other assets on the other side, and put up a common structure
and
for
financial assets, it's 12 months?
Yeah.
Or all other assets are 24 months?
That's right.
I wonder if there will be some impact on realty stocks.
What we don't know is, given that this budget is being presented on July 23rd, whether gains made between April and July. So if I sold something in this financial year between April and July, is that 10% or 12.5%? It will be 12.5%. So in a sense,
it is retrospective. It's opposite of what Madhu is saying.
Versus Madhu saying that this is prospective. It is actually, so STT is prospective.
STT is prospective, but STCG and LTCG.
Both short-term capital gains and long-term capital gains is effective April 1, 2024.
Fair
in a
enough.
sense,
And just to clarify, it is always so. So, for example, even the last interim budget, 2018, the surcharge was increased substantially. That was the budget where it went to 41%. It applied to all income from 1st April.
April 1st.
So, to that extent, it does become retrospective, and that can't be helped.
Madhu, you want to come in quickly, respond? Okay, I think we don't have Madhu. Nilesh is with us of Kotak Mahindra Asset Management. Nilesh bhai, good to have you back. Your first thoughts on what's been done on the capital gains tax side?
So essentially, if you look at capital gains, they were removed and STT was levied. Then in 2018, capital gains came back. And now the rates have been increased. The amounts are not going to be more than 20,000-30,000 crore by way of collection. And if we include the revised increase limit from 1 lakh rupee to 1,25,000, 1,25,000 rupee, then even that collection will come down. Now, clearly for such a small amount, was there a need to increase this taxes? I think this could have been achieved by creating level playing field between foreign investors and Indian investors. When Indian investors trade in derivatives, it's business income and it gets taxed at applicable slab rates. When foreign investors trade in derivatives, it is considered as capital gain. And there are so many high-frequency traders trading in our market, making tons of money and paying no taxes. It would have been better to tax them and create a level playing field investors and get the same amount of money. Even the proposal on buyback of shares. Now, you are saying that if a company does buyback, we will shift the tax to the recipients. What if the company is doing buyback in the market? How will I know I have sold to the company or in the market? So clearly, there are certain changes which have some nuances, and this could have been handled in a better manner from a market point of view.
Nilesh, apart from the taxation part, what else in the budget stood out for you? And from a market standpoint, given that we've seen a dip, what is your recommendation now? Should one use this opportunity to buy into the market?
Sonia, I think the biggest benefit or positive of budget was fiscal consolidation. FY20 fiscal deficit was estimated at 5.8%. We are starting FY25 at 4.9%. That's 90 basis point consolidation without taking into account tax buoyancy. My feeling is that the tax collection will be higher than what is estimated in the budget, as the June quarter advanced tax collection is running at a higher level. Second, it is also committing fiscal consolidation going ahead, 4.5 for FY26, and debt to GDP ratio to remain lower thereafter. I think fiscal consolidation, fiscal prudence is the most important part of this budget.
Okay. You know, I want to make 2 points. One is this STT bit, which is going to be rolled out immediately. Will it be an issue for brokers, etc.? Because they got to calculate it, right, at a different rate, almost immediately from, I don't know.
So they will have to simply change the software.
It's nothing.
No, that's easy. It's already done probably.
Okay. And the other one is, I want to point out what ITC is doing right now. ITC is up 4.5%. Okay. And that is the single biggest sort of mover. Okay. I mean, it's not the change which has happened for ITC, it's a change which has not happened. I think it's adding about 40, 50 index points to the Nifty, and that's the reason why the market has recovered actually quite sharply. So just wanted to make that point as well.
Okay, 1 minute, there's a clarification, Mr. Kannabar and Ashok Wadhwa in particular. The higher capital gains tax kicks in from today.
So from July, sales from July.
Yeah, sales from July 23rd.
So it is not
Page 6 on the explanatory memorandum, it's a message that we've got from Ridham Desai. So he says he has seen that page and therefore sales here on and the previous 4 months sales will not be taxed at 12.5 but it will be taxed at 10%. Prashant Khemka has been patiently waiting by. Thank you so much for your patience, Prashant. Well, this is also a Bihar Viksit budget, you will have to say, and an Andhra Viksit budget. And also I want to give credit to the government. You know, 11.1 lakh crore is a very good capex budget. If it has not been increased, it is because there are only 6 more months to spend that money and there is no point increasing that. So maybe we should not be too unfair to the government. 11.1 lakh crore is a very good capex budget. But anyway, is there anything on the capital goods side that attracts you, Prashant? What exactly makes you attracts you in the market today?
No, I think other than the topic that we've discussed at length, which is the capital gains tax, which is negative, but I think overall, otherwise, it is a good budget of continuity. The prior budgets have all been very well welcomed by the market because they had all essentially the same ingredients as the budget today, except for the capital gains tax, right? So the rest of the elements, including the capital expenditure, as you pointed out, there's 6 months left, there'll be new budget. No, I don't think there are particular expectations of revising upwards that number from the February budget. So that's as it is. On the consumption side, yes, the heavier emphasis on rural development and on job creation should be beneficial for consumption overall. And most particularly what I'm excited about and hopefully maybe somewhat wishful think we should make considerable progress on, and if Ashok or Dinesh have some comments on that, is the review of the tax code.
What did you want clarification on?
So the review of tax code, how it sounded like very material to me. And simplification, ease of doing business. Also the fine print on gift city, because in passing, the FM did mention that taxes have been reduced and simplified or something to that effect for the gift city. That would be very important to see in the fine print.
I would just respond to that very quickly. I think that it's a very important point, and sometimes you tend to miss in the light of this capital gains thing. So there was a request that the TDS rates be unified. That has been done. There was a request that TCS, one should not wait for a refund. It should be allowed to be set off against TDS. That has happened. So number of changes. So on TDS, on capital gains tax, on charity, again, I had to study all of it. So, and what she is saying is that these are the changes I'm introducing here and now, and all the other changes I'm going to review. And in 6 months, which means that the next budget is also going to be a lot about taxes.
Okay, I just want to make it clear what Dinesh has said. It's a very important point that Mr. Kanabar is making. We were all worried that if you say you bought a foreign travel ticket on a credit card, you had a TCS of 20% on it, and you had to wait for the next end of the year to claim that back. Now it will be claimed in your next salary payment itself, which is very efficient. After all, the idea was to catch those who are having foreign travels and credit card payments but not paying tax. So, you know, this cleaning up the process is extremely important. But Kiran Mazumdar-Shaw is with us, the executive chairperson of Biocon and Biocon Biologics. Kiran, thank you immensely for sparing time. What were the first takeaways for you?
Well, you know, everyone has touched upon all the various, financial and capital allocations and tax, slabs. But I'd like to really shift gears and really focus on a couple of areas which I thought were very positive indicators of how the government is looking at economic development. One, of course, is about the startup sector and the kind of, allocation of budgetary spending is being looked at. Especially, I think the startup sector has much to cheer about when it comes to the abolition of the angel tax. But apart from that, I'm glad to see that even at the rural level, you've got the Mudra scheme also that's looking at entrepreneurship. You're looking at a large, fillip for the startup sector in many ways in terms of ease of doing business. And in the case of our sector, I was heartened to at least hear an announcement that research and innovation is going to be a big focus for the government. You know, how they've actually set aside 1 lakh crore as a budgetary allocation for private sector research, but we need to read the fine print. How is this going to be deployed? How is this going to be, converted into incentivizing industry, et cetera, Yeah. So overall, I think, like everyone's been saying, I think no one expected a huge change from what was announced earlier this year. I think they're trying to build momentum, and at least, everything is moving in the right direction. That's how I would put it.
Okay, point.
Right. I just want to highlight one more thing. Gold, right? I mean, gold has seen changes. So the total incidence of tax, including GST, has gone from some 18%, has gone down to about 9% or so. And look at what some of these stocks are doing.
Basic customs duty is down to 6%.
Correct. Titan is up 6, Senco is up 10%, that entire sector. I mean, I think expectation is that, this will actually spur sort of gold sales and demand, etc., in a meaningful way. So we'll have those stocks up in just a bit. But I wanted, Mr. Vadva, your thoughts on real estate, that threshold being brought down from 36 to 24 months. What will it do to for the sector? What will it mean?
Obviously, it's very good. I mean, not only 36 comes down to 24, but the rates are also aligned, which means that for long-term capital gains tax now, there's one rate, 12.5%.
Which is 12.5%.
12.5%. So you were paying long-term.
So if I sell my house now, the capital gains I'll pay will be
12.5% versus your
original of
20%. Of 20%.
Okay, that's
no, short-term was, long-term was 20% plus the surcharge. Okay. There's just one other clarification that you need to bear in mind. So when buyback happens, earlier, the company paid the tax, but the individual did not pay the tax. Now, it will be taxed as dividend in the hands of the individual. But then the question is, what happens to the cost?
Okay.
That cost will be treated as a loss and will be allowed as a set-off against your capital gain.
That's a bit of a relief, big relief.
That's a big relief.
Yeah, absolutely. Mr. Anish Shah is with us. Mr. Shah, before I hand you over to Shireen, the last statement you made before we went into the finance minister's speech was that something should be done for skilling and employment. And there is a fairly good scheme for 1 crore youth employed. Corporates get some kind of a benefit for formalizing those jobs. What's your first reaction?
So first reaction is very positive. We see this as a growth-oriented budget that meets various different factors that we would want from an industry perspective.
Right, Anish, let's get down to some of the specifics, and we didn't hear it in the finance minister's speech, and I don't know whether this is going to be part of that green transition plan and roadmap that the government says is work in progress and will be announced, but no FAME 3 in the speech so far. We still have to go over the budget documents to see if there is an allocation there. Anish, what do you make of that?
So Shireen, we were not expecting FAME 3 in the budget itself. All indications that we had received was that that would be done separately as part of the normal course from the various ministries. So this is not something that we were expecting in the budget.
Okay, so you weren't expecting FAME 3 in the budget, but on balance, in terms of what the government has done, continuity on the big numbers, in fact, pretty much staying intact with the interim budget projections, as well as some of the changes brought in, relief for the salaried class, some of the tax changes on the simplification side, and of course on capital gains, the changes that have already been discussed in detail by our tax experts. But on balance, what would be your biggest takeaway from what this budget has managed to achieve?
On balance, Shireen, it's staying the course. It is a growth-oriented budget that focuses on inclusive growth. There is a strong element of simplification and ease of doing business. And if I were to look at it from a FICCI perspective, it really meets all the priorities that FICCI and the industry had laid out, which is around Make in India, women-led development, farm prosperity, and sustainability.
Specifically on the manufacturing side, and I want to link this to the job creation schemes that have been highlighted by the government, and link this also to what they have decided to do to nurture and bolster MSMEs. What, from an overall holistic manufacturing perspective, Anisha, how much does this change things? How much does the compass move on account of the many measures announced by the budget on jobs, on industrial parks, on supporting MSMEs, on access to credit?
Shireen, it's a significant step forward in terms of developing India as a manufacturing hub. The focus on infrastructure, the focus on capex continuing to be at 3.4% of GDP. The focus on jobs, because that's going to be, skilling is going to be an important aspect for India to become the manufacturing hub. And that combined with the short-term stimulus on demand through tax break for salaried, which is to the tune of 17,500 rupees, I think all of those things are positive from a manufacturing standpoint and are the right steps to be able to really make India the manufacturing hub for the world.
Nilesh, let me come back to you now. While we go over the fine print, again, in terms of some of the policy announcements, for instance, PM Awas, etc., also the allocation not being announced, saying that we will put that number down. Many other such work in progress, including the income tax simplification, that was, of course, a big positive that has been spoken of. Nilesh, to your mind, outside of the tax-related changes, the 3 or 4 big-ticket items that you take away from this?
So one, the fiscal consolidation, that's really big and positive. Second, import duty cut on gold. Today, gold returns are included with 18% tax incidence. Tomorrow, that will be included with 6% or 9% tax incidence. And that will take away some return of gold and hopefully allocation to gold. The third thing, which is very good, is related to new pension scheme. The employees' contribution has been upped from 10% to 14%. I hope and pray every employee takes advantage of NPS. Not only they secure their future, but it also cultivates long-term investment habit. And one more thing from a market point of view is safe harbor clause review. Today, so many of Indians are managing money into India from outside jurisdiction of India. We don't benefit in any way, and we allow other countries like Singapore and Dubai to develop as a regional financial center. The finance minister, in our pre-budget consultation, we had requested Honorable Finance Minister to look at safe harbor clause. And I'm very glad that it has been announced in the budget. Hopefully, next time Prashant Khimka will be in studio and not giving from outside of India.
Okay, good point, Nilesh. You know, there is a doubt about whether indexation has been removed for property. Would that be at all done?
I mean,
I think it's an error.
So if they brought the tax rate down to 12.5%, I would be surprised.
They would remove indexation altogether?
Altogether. So there are two changes.
Okay.
One is that there was an arbitrage on interest. So if you had debentures or bonds...
You mean a house you bought for like maybe, 30 lakhs or something back in the 90s or back in the 80s would now be worth several crores. You mean the 12% will apply on that level?
So two changes, Lata. First is that if you have any interest yielding asset, debentures or bonds, what you could do up to now is that you would have interest maybe back-ended, sell it and make capital gains.
Yes.
To remove that, they have now said that bonds and debentures, if you sell, the income will be short-term capital gain, even if you held it for a period
Fair
of more
enough.
than 2 years.
No, I'm more worried about the property bit.
Yeah. So it's not just property. On all asset classes, indexation seems to have been removed for sales after July.
Okay, now that's a big one. We'll have to ask realty companies and even individuals.
Yep.
I think whatever you got, the paltry gain you make in terms of capital gains limit being raised from 1 lakh to 1,25,000 is more than wiped out.
Or the rate coming down.
Or the rate coming down gets wiped out with this. Yeah. But Nilesh made a very important point about the macros and that 4.9% fiscal deficit. It's very good to see that 4 handle on the deficit after a very long time, after maybe 4 or 5 years. Does that put us in line for an upgrade, Nilesh? I mean, is this a very big step towards a very long journey, of course?
So, Lata, I will start with a lighter vein and then let Sajid answer it in a serious vein.
Okay.
Well, the rating agencies are saying that we are Moody's and we have poor standards. To expect from them a rating upgrade will be a bit difficult with these numbers in a track record of not defaulting since Mohenjo-daro days.
Okay.
I'm sure rating agencies will require long-term track record to upgrade India's credit rating. 5,000 years is not good enough.
No, Nikhil, Nilesh, see, we have to live with what we have. So there's no point, trying to compare people.
Will answer.
No, we also have to remember that compared to all other BBB minus countries, we have a higher fiscal deficit and a much higher fiscal deficit. But that's a different debate for a different day with a different audience. Sajid Chinoy has joined us. Sajid, all the big numbers are with you. What would your take be? Fiscal deficit down.
I would say macroeconomically very prudent, very sound, right? So the deficit, as you said, the center is below 5 at 4.9. Importantly, center and states combined in FY25 should be below 8% for the first time in 5 years. Now that's meaningful. Number two, this is a good balance between saving and spending. Compared to the interim budget, the government had about 0.5% of GDP in extra resources, both taxes and the RBI dividend. And that's been split very well. It's a half of that has gone towards more consolidation and lower deficit, and half of that has gone towards revenue expenditure, which I think was needed. Number three, the assumptions and taxes, very conservative. Last year, on a nominal GDP of 9.6, gross taxes grew 13.5%. This year, nominal GDP is pegged at 10.5, which is fair enough. And on that, we're just assuming gross tax growth of 10.6%. So it's 10.8%. So it's just barely over 1. Now, to be fair, there are many tax changes, so we need to account for how much that adds or subtracts. But prima facie, the assumptions on taxes are extremely conservative and could surprise to the upside. And the last thing I'll say is, there's a lot of focus on what's happening in financial markets. I think we should step back and look at the important things this budget has done on plumbing. For me in particular, focusing on employment, focusing on skilling, focusing on cutting import duty so exports become more important, focusing on reforming direct taxes so that we've got more space for higher expenditure. These are the plumbing issues that I think will grow to appreciate over time.
I completely take your point on employment. If this really fires, if corporate India is able to take advantage of, the SOPs given so that you hire newer employees, and those SOPs are available for the next 4 years for 1 crore employees, then we've definitely inched up on formalization of employment and employment per se. So full credit to the government for those. And the benefits of that are only going to be reaped in the years to come. Employment, an employer cannot start employing more new people simply because 4,000 rupees is available per new employee. But nevertheless, it is one small step, and it will perhaps help mid-cap companies. Mr. Anisha, you've perhaps gone through the budget and thought over it in greater detail. Do you think this moves the needle on employment?
I think it's a good step because it starts signaling that we should be looking at growth with jobs, with skilling. And even if you were to take it as here's an amount that's given for skilling new folks coming in and making it easier for companies to employ faster, I think that's a positive step. So therefore, it's not going to change a decision to employ based on what was mentioned earlier, especially for larger companies, because that's going to be based on growth, on capex, etc. But I think this does make it easier and pave the road for us to be able to start looking at jobs and skilling in a much bigger way.
Okay, fair point. Once again, I would say that we wouldn't fault the government for not increasing the capex budget, because you have only 6 months left, and increasing money, and the capex budget was not met. Capex expenditure was not met in the April-May numbers, which we already have, for the simple reason that the government was busy. Several bills would not have been passed by the departments concerned, and therefore not increasing the budget this year is okay, but 1.5 lakh crore has been given as interest-free grant, 50-year interest-free loans to the states, and therefore that kind of capex can continue. Shireen, you have some questions?
Oh, well, that's right. We do have our panel here, the top brass of CII with us. Sanjeev Puri, CV, many thanks for joining us. ITC, the stock of the moment, the last time I checked, it was up by about 4%. So that should certainly be good news for you, Mr. Puri. But let's talk about the budget on balance now. Many of the things that we talked about in terms of continuity, in terms of stability, especially macroeconomic stability, the budget has clearly and squarely delivered on that. Some of the ideas, and a lot of this will boil down to finally execution as well. But on the job creation front, because again, the compact with industry is what the government is hoping for. Do you believe that this will incentivize industry to hire more, or do you believe that, look, there has to be a business case for industry to hire? The incentives may not move the needle much.
Okay, let me first start by saying it's quite a commendable budget, because it's really looked at the issues of jobs as you've spoken about. It's looked at in depth about rural and agriculture, issues of climate change. At the same time, very important focus on, the journey for the next phase of transformation, next generation reforms, a lot of work on ease of doing business, and a lot of, coordination with state and incentivization with state, looking at a lot of important issues of natural resources like water, land, and all of that. So extremely good. Now coming to this specific question on livelihood. Now, of course, there has to be no doubt a business case, but what is required is that the economic transformation continues, which is what the policy continuity and additional interventions will do, and all these incentives reduce one element of the factor cost. So it does kind of add some impetus to the whole employment situation. But more importantly, I think what is going to lead to more livelihood creation is also the very strong focus on skilling.
Yeah.
And this whole ideas of, top 500 companies, apprenticeships, and a lot of other schemes are there within education and skilling. I think those are very important, because today we are also sitting on opportunities which are not filled in a timely fashion because there is a mismatch in skills. So I think that itself on its own will lead to job creation.
So your biggest idea or your biggest takeaway from the budget?
I think it's very comprehensive, and it addresses this whole area of economic transformation for livelihood and for fighting climate emergency quite well within macro stability.
And we need to see the roadmap as far as the green transition is concerned. Welcome to Mr. Mukundan as well. And Rajiv Memani, you're back. You stuck your neck out and said you believe this will be the budget that will move on capital gains, and that's what's happened. The expectation was that they wouldn't do both short-term as well as long-term. Both have happened. Go over the fine print for us, and what, to your mind, will be the implications and any clarifications that you believe are needed.
Yeah. I haven't gone through the fine print as yet, but I can, from whatever I've made out from the budget speech and a few paras here and there, I would say that you can break the tax thing into four sort of buckets. One, I think, is there has been a focus on simplification. So whether it's announcing that they will come out with a new tax code by next year.
Next 6 months.
Or Vivad se Vishwas. And then on TDS, providing TDS credit and everything else. The reassessment thing is a big thing. So I think there are many things. The second, obviously, is capital gains, which on long-term capital gains, the rate's gone from 10 to 12.5%, on listed equity, 15 to 20%. At the same time, for land, it's come from 20% down to 12.5%, although indexation has been done away with.
So that's the clarification that we were hoping for, and Prashant, Lata Surabhi, Rajiv Memani confirming that the indexation for real estate has been done away with, even though the tax has been reduced to 12.5%, the indexation benefit has been done away with. Go ahead, Rajiv.
And buyback tax, which has been changed. But the way they have said is it will not be treated as capital gains in the hands. Earlier, company was paying buyback tax. It will be treated as dividend income, and the cost that they have, that will be treated as an expense against that. So I think that's a logical way of doing that. So I think that on the capital gain side, debt-oriented mutual funds will be happier. So on the capital gain side, and on REIT and InvITs, there was an anomaly. So that REIT and InvITs now becomes in the same way as listed equity shares. So I think REIT and earlier the capital gain tenure was 3 years. Now that comes to 1 year, and the rate also changes. So I think overall, I think the second level of change would be in the capital gain area of capital gains. The third, foreign companies, I think equalization levy of 2% going away. It came in 2020.
Correct.
Not as part of budget, but it was later on added. And secondly, foreign company taxation
being reduced
by 5%. So I think that was a big ask from a lot of people. So I think that will benefit a lot of the foreign companies who have branch setups here or who have got project offices here. And I would say fourthly, on the personal tax side, as we had discussed, I think the pivot towards the new tax regime is there. So standard deduction benefit only available to in the new tax regime. There's some changes in slab rates that have happened. I think that's also
only in the new tax regime. That's right.
And NPS also, if I'm not 100% sure, but I think that also is probably only in new tax regime. I'm not 100% sure.
Well, on the NPS, she said we're working on the solution and we will arrive at that.
No, she said 10. So what was earlier available to government employees, they could get 14%. And private sector employees were getting 10%. Now both of them go to 14%. So that gets balanced out. So I would say the tax things I would break into sort of as it on direct tax. If I was to look at it, I would break into 4 buckets. I think a number of tax changes, honestly, after a long time in a budget.
Yes, it's been a heavy budget for tax.
For tax. Yeah. I think some, especially on the simplification side, the reassessment piece and everything, there will be. And the big thing, Shireen, I think, as mentioned, I think the government sticking to the macroeconomic stability and the focus on jobs and skilling, I think that's really massive, really bold moves on that, big change on that. So I think government clearly recognizing that this is a big area to solve.
Yes, it is a big area, it's a big challenge, but Mr. Mukundan, as far as growth is concerned, in many of these measures that we just spoke of, the hope will be that this will provide the stimulus needed to be able to get us to 7% plus. Enough in the budget to deliver on the growth promise?
Yeah, of course. I think what the budget has done is budget has focused on fiscal consolidation on one hand, but has not let up on some of the issues which we need to address if you have to have a long-term growth. One is where Sanjeev said fundamentally on the climate change, how do we make the energy transition? There's clearly a measure of that. There's a measure on R&D. But if you look at agriculture, she spoke about agriculture productivity, very, very important for us for stimulating rural demand. Then the focus on skilling and jobs and internships at the company level, incentivizing it so that we get more people on the workforce. At the same time, focus on MSME and the focus on infrastructure, because if India has got to be competitive, we've got to focus on these three factors. And I think all these three are welcome factors. One more layer which was added was a look east policy. I think the look east, in some ways, you've got to think about it is to say if India is to have inclusive growth, the eastern part of India needs to also have a GDP growth which is commensurate with its potential, including agriculture potential in east is far higher than the rest of India. And I think getting that focus right is very, very important.
Yes, and of course, there was special mention for both Bihar and Andhra Pradesh, which was the expectation, 15,000 crores in FY25 for the state of Andhra Pradesh for Amravati. And of course, there was specific allocations for the Polavaram irrigation project as well. But on FDI, and that was again, a piece which is work in progress, simplification to bring in more FDI. She didn't specify what the government is thinking of. What would you take away from that?
It was a policy statement. I think the details of that is still to be seen. But I think some of these steps on foreign company taxation, equalization levy are good indicators. They don't apply to investments. They apply more to project offices and branches. But I would say that the investors should look at just the macroeconomic thing. The FDI, the fiscal deficit coming down, borrowings coming down. I think broad themes are very strong.
And the broad themes continue to be the focus areas of the government, whether it was the 5 schemes or the 9 priorities. It's pretty much a continuation of what the government has been focusing on, CB. The 2-3 ideas that you like, that you hope the government will build on and will be important from an execution standpoint.
I think one thing which I see having gotten carried forward is the focus on how the private sector is being given space to participate and in the growth story. So there's a lot of now focus on the private sector to come in. There is a lot of space given to the private sector to come in. So it's an entire story of how do we build trust and get the private sector to take the benefit of the incentives being given on jobs, on skilling. So you talk about skill gaps, and you talk about you are not getting people, as well as you're talking about an employment issue. So that's where I see a lot of role which the private sector can play, and I hope that they will. The second part is, very interestingly, I found one of the things that we have talked about in your show earlier is the role of states. While we talked about 2 states, but it has also talked about how it incentivizes states to participate in the next generation reforms. I think that's a very, very interesting takeaway for me, because we need that to happen. And third, and lastly, is the rural side. I think the focus on the rural infrastructure, when we see the capex, the quality of the capex spent on agriculture, irrigation, I think that would be one of my key takeaways from the budget.
Enough here to drive consumption. I mean, if you move to the new tax regime, the savings account to about 17,500 is what the finance minister mentioned. But do you believe that on balance, with everything that's been put in place, enough to stimulate consumption further?
So, the ultimate solution for consumption is actually what's been done in the past is a virtuous cycle of investment, employment, consumption. And I think that's where the predominant focus of this budget is, and that's what, we've always said that. And we had said that some bit of relief given the context today. So there's been some relief provided in income tax. And I think with the measures that are being taken in agriculture, the measures being taken in skilling, a lot of that should hopefully benefits transfer to the rural area, the investments in infrastructure. I think that should itself stimulate demand. We should also see the lagged impact of all the investment-led growth, because there is there's always a lag between the investment and the consumption coming. With passage of time, I think the benefits of that should start coming in also. And fortunately, the weather gods are still kind so far this year on balance. So that itself should provide a positive for the rural economy. Of course, that's a serious monitorable, because it's difficult to predict today. But so far, it appears to be on a positive compared to the past.
Holding up so far, the weather gods. Mr. Mukundan, before I let you go, in terms of the many measures, and as I pointed out, some are specific announcements, but many will be work in progress, whether at the central government level or in coordination with industry as well as states. Do you believe that, we had the smart city project, for instance. Today, the government is talking about urban cities and, improving infrastructure and so on and so forth as far as cities with a population of 30 million plus and so on and so forth. So do you believe that, is there a fear or a concern that, we might get lost as far as the execution roadmap is concerned? Intent, strong on intent, but perhaps execution may be a cause for concern.
So I think in terms of making sure our urban bodies are much more, let's say, vibrant, much more able to execute on the ground, I think is one thrust this government has brought on the table. But I think it's a work in progress because, at the first level, he said go to states. And when you go to cities, it's one more level below. And I think it's going to be something which both center and state have to work together.
Well, yes, a lot of coordination and collaborative federalism is the need of the hour, not perhaps as much competitive federalism as we've gotten used to over the last few years. But gentlemen, appreciate you joining us. I would imagine that much more will be revealed in the fine print as you go over that. So we will look forward to speaking with you again. But thanks very much for your time. That's the view here. Industry, as always, confident that the budget has put enough on the table to spur growth and feeling good about private investment picking up from here on. The markets at this point in time, it's a 600-point drop on the Sensex, about 575 points drop on the Sensex, and reacting, as we pointed out, to the changes that have come in on capital gains. But the mood in industry continues to be sanguine on balance as it was ahead of the budget. Lata.
Okay, thanks a lot for that, Shireen. Mood may be positive for industrialists. Hopefully, that will make them employ more people, which is what the CEA and the finance minister seem to want. But there is one issue on which the mood is definitely somber, and it is not just capital gains tax rising on short-term and long-term sale of equity. It is also that you don't get indexation on property that is sold. Say a house which was purchasable in the thousands in the early 90s or 80s would be sold by a person after he retires today for probably 1 crore. Until now, it was indexed. You got the CPI indexed to these 30 years, and only on the balance you had to pay your long-term capital gains. That long-term capital gains has been brought down to 12.5%, but there is no indexation available. Basically, if you sold a 30,000 rupee house for 1 crore, you're going to pay the tax on the entire 1 crore, 12.5%. So there is going to be definitely some problem for real estate guys who are trying to sell new houses, because almost everyone is selling the house to someone who is selling an old house and buying a new property. So there could be some kind of problem for real estate guys, at least the budgets go down.
Actually, two things, Lata, which were there. One was, it was not only indexation, there was a reset of the cost. So if you acquired a house 50 years ago, there was a resetting of the cost to 2004 and then an indexation. Indexation is gone. I'm not too sure as yet as to whether the 2000 reset also or not.
Indexation.
We have to hold on to this conversation.
Indexation versus taxation going down. At the margin, is it neutral? Is it negative? Is it positive?
It really depends on how long you have held. If you held it for very long, then it will be negative.
Right. Okay.
I think we have to go to two corporates who are waiting anxiously, and we'll come back to you. We have Sunita Reddy of Apollo Hospitals joining us, and Mr. H.M. Bangur, the chairman of Shree Cement, as well joining us. Sunita and Mr. Bangur, thank you very much for your patience. We are getting lost in the litany of tax litigation and the fine print, so hence the delay. But Sunita, first thoughts, what have you made? There are some benefits given for R&D, some a basic customs duty on some import of medicines has been revoked or brought down to zero. Your first thoughts on the budget itself?
No, I think it was a good budget, very stable. I really like the focus on skilling and the fact that, for 4.1 crore youth, the government is willing to invest 2 lakh crores. And we can use our CSR funding for internships. I think this will have a huge impact on the healthcare industry, because skilling was something that was much needed in this industry. what you mentioned about customs duty, realization and reduction for, especially in the oncology space, for 3 other medicines, as well as on tubes, I think, is going to reduce the cost of delivery of oncology care. And I think that this is something that is much needed because it's growing at 20%. So it will be very impactful. The third that I wanted to stress on is, they did make some mention about women and creating better workspaces. I think this issue of creating jobs, helping them to stay as working women even after they have children, enabling them to come back to work is a very important factor in contributing to the GDP of the country.
Most of the tax.
We should really recognize this. With regard to research, even though the allocation was 1 lakh crore, I believe that we're still at 0.7% of GDP. And I'm hopeful that we could work with the government to really increase this from 0.7% to something more meaningful. And finally, I have to say that for the healthcare sector, I think the GST, where we have no set off against the input cost, is something that we need to have conversations with the state and the central government and the GST Council.
Right.
On what specifically, Sunita Reddy, GST?
Yes, I think,
No, which
we really
specific-
need to do some. No, I think, for example, for the input tax, GST tax that we pay, 18%, there's no set off. We're in the negative list.
Okay.
So I'm hoping for some rationalization there.
Okay. Yeah, that's outside the purview of the central budget. So
Yes,
it
but
will
she
have to
did
be raised.
mention, she started by mentioning that there will be some look at a GST.
All right. Then that's extremely positive. Hold on, Sunita Reddy, for just 1 minute. Let me invite Mr. H.M. Bangur, the chairman of Shree Cement, as well. Mr. Bangur, again, thank you for coming and thank you for your patience. Well, under the PMAY, there is 3 crore additional houses that are going to be supported with subvention on credit. So more houses would mean more cement. Your overall takeaway from the budget?
Yes, that is right. But more houses means much more jobs. Construction industry is one where the maximum number of jobs are created per unit of expenses. So 3 crore house is the cheapest way to create more jobs. So that has been achieved both ways. Houses
Bangur?
are needed here. Yes, please.
Right. Mr. Bangur, do you think, what does the slew of announcements which have come through, does it give a leg up to cement demand as you see it?
Of course, more than 12 lakh, about 11 to 12 lakh crores are being spent on infrastructure.
Yep.
And in the infrastructure, maximum consumption is of cement.
Yep.
And it will be done very fast. Secondly, the road connectivity also leads to cement availability in the rural areas at the affordable cost.
Fair point. Yeah, fair point, Mr. Bangur. Just hold on. I want to come to Sunita Reddy also on the point of the extraordinary munificence shown expectedly to the state of Andhra Pradesh. There is going to be a lot of road development, 15,000 crore of additional spend on that state. I'm sure, Sunita, of course, you have hospitals all over the country, but I wouldn't be surprised if you had, a little more of an emphasis in the states of Telangana and Andhra Pradesh as well. What's your sense? Do you see, a greater deal of infrastructure activity in the state?
I definitely do. I think that with the leadership currently in place, with this allocation and the fact that there's a lot of foreign direct investment looking at this state, the signal from the center will only incentivize more investment, including healthcare infrastructure.
Yeah, there is also a lot. I mean, one of the many programs she announced also was industrial development and grants for water, power, railways, etc. There is, the Visakhapatnam corridor as well, which was mentioned. So the backward region of Rayalaseema is going to get some benefits. So all this will mean, of course, demand for everyone. And there is likewise a similar package for Bihar. So, Mr. Bangur, are these centers you sell to? Are these important centers for Shree Cement as well? And therefore, your reaction?
Yes, in Bihar, we are having the biggest factory, and Bihar was having consumption much lower than the Indian average.
Okay.
So even if the Indian average consumption comes there, and with road connectivity, with all these infrastructure and the money available there, because when money is spent, a lot of profit will be remaining with the people of Bihar. We expect Bihar to grow much faster. And moreover, this budget is a continuity not only to be seen for this year, but for next 5 years. It is a groundwork. This year it is Bihar and Andhra, next year it may be some other states. Now, full India will be developed in fast mode.
All right. Hi, Mr. Bangur, and welcome to the show. This is Nigel on this side. A couple of questions with regard to demand first. Post this, you're sounding quite optimistic with regard to the steps that have taken. So, industry demand, what are you focusing on? It should grow by around 8 to 10% for this growth this year, if you could confirm that. And also, would you have liked some more focus on the green energy side? Because companies like you are putting a lot of money, a lot of focus on that side. Since prices are not moving up, maybe some relief on the cost side?
Yes, 8 to 10% demand growth is expected. And as far as the renewable energy, it is because so many things are being said. One important point of incentivizing pump hydro that has been missed. So a lot of work has to be done and is being done for seeing that the renewable energy remains relevant. And if additional energy is produced in the off time, then that can be stored and reused. So the renewable energy is definitely the future.
Okay. The other important announcements in the budget, of course, have been on capital gains. Mr. Bangur, basically, as from a finance standpoint, for a company like yours, are there any differences at all if long-term, short-term capital gains change and indexation of property is gone? Do all these make a difference to a corporate, or is it largely an individual's headache?
It is largely an individual's headache. We have to, every time we normally talk about how the collection is made. This time the budget has to be focused on how the spending will be done. There is very little thing has been done, small changes in collection side.
Okay.
For individuals and for the specific cases, it will be big. But overall, it will have not much meaning.
Okay. Sunita, I want to come back to you on that very important point you raised, that all the advantages of skilling and the subsidy given by the government for corporates that have new employees, I think about 1 crore employees at least for the next 4 years. If you can tell us whether this is this will mean what, more nurses, more sub-staff for the hospital industry? How do you see it playing out? And will it make a very big difference in terms of increasing the number of hospitals and help?
Oh, definitely it will, because especially at Apollo, where we're adding 6 hospitals, at least 2,000 beds, I could quantify the difference, and let me say it's meaningful. So not only from staff that are from the back office to those that are consumer facing, I think this will be a huge benefit for the healthcare industry.
Okay. Now, would this actually make you employ more? I mean, employment is always a budget which you have to keep in mind among other things. But will this be an incentive to employ more people, especially at the new joinee level?
Yes, I think it is definitely an incentive to employ more. But more important is that you have to think of the ripple effect. When you do one healthcare job, there are 4 ancillary jobs that are being created. So the impact on the industry will be large.
Fair point. Sunita Reddy, thank you very much, and for giving us this human welfare angle or skilling angle. Mr. Bangur, similar question to you. Do you think this broadly encourages formalization of labor? There are a lot of lower skilled labor which companies, large companies, outsource to the staffing companies, and not all staffing companies are only looking at formal jobs. Do you think largely formalization of jobs will be increased?
Formalization job is one part, but my focus will be if they are there for 1 year in a big company, first 500 companies, the skill level there will increase tremendously, and they will be fit to be employed anywhere in any industry. So staying with these big companies for 1 year will definitely increase their skill level. And I am focusing on skill level which is there, which will be increasing. Teaching the skill is best done by practical, on-ground experience.
Okay. Any other comments you have on the budget, Mr. Bangur? Anything we may have missed asking you?
Not really missed. Only positive things is that this is the first step of the 5-year term. Lot of things that we are moving towards more on capital expenditure, which means long-term growth of the country. So we feel that short-term small pains will be there. Somebody will be disappointed this has not been done. But overall, when we see, it is that next year 7.5% to 8% growth also of the country may be expected.
Okay, all right. Mr. Bangur, thank you very much for joining us here. Appreciate your time here. Mrs. Reddy, great to have you with us as well on the program. Sajid, good afternoon. Prashant here. Good to have you back. By the way, have you had the chance to hop over to the on the equity side to figure out what the chatter is like there? Is it a lot about taxation or what is it?
Good afternoon, Prashant. I'm going to stick to the macros. I think this was both fiscally and financially very prudent, actually.
Okay. No, absolutely. Any finer points that you can tell us in terms of food subsidy, fertilizer subsidy, or the way in which expenditure has been distributed? We only asked you about the broad fiscal deficit, which has come down. But any of the finer points in terms of nature of expenditure?
Yes, thanks, Lata. So a couple of things. We now have some more detail. Remember the deficit, if you compare actuals last year to what's projected this year, goes from 5.6 to 4.9. Now, the good news is that most of this is happening through either asset sales or happening from what I call the non-contractionary component of the RBI's dividend. Because a lot of that dividend came from interest earnings on foreign assets. A lot of that dividend came from FX revaluation. So what's important is to understand when the fiscal deficit is consolidating, how much of that imparts a negative fiscal impulse on the economy, how much of that is going to be contractionary. And the good news is because a lot of the consolidation this year is happening from the RBI dividend, you get a 0.7% of GDP consolidation, but only a 0.3% in terms of contraction. A lot is happening on the revenue side, number one. Number two, I think what you're seeing is the mix on expenditures continues to be healthy. Capital expenditure compared to last year goes up further from 3.2 to 3.4%. Subsidies go down. Revenue expenditure, ex-interest and subsidies, actually goes up compared to the interim budget. So essentially what's happened is the government had about 0.4% of GDP in extra resources compared to February. Half of that went towards non-interest, non-subsidy current expenditures. Hopefully that should boost rural demand, aggregate demand. Half of that went towards fiscal consolidation.
Okay, got that. But from an employment point of view, do you think, you must have just heard Sunita Reddy saying that it gives a huge fillip to the health industry because it is employment oriented and they will actually be incentivized to take new joinees because there is some kind of an EPFO subsidy. The more number you enroll into the EPFO, that is, the more formal jobs you give, there is some 4-year subsidy that is given to those companies. Do you think this really moves the needle on employment and therefore can have multiplier effects?
A couple of things that are. One is, I just make 3 quick points. One is, as we've discussed before, the key issue for private investment is demand. Right? So we have to find a way to boost demand. Now, there is no cyclical space as we previously discussed. Deficits have to come down. Monetary policy has limited room given what's happening globally and with food inflation. So this will have to be, how do you structurally boost demand? And the structural demand has to come either from consumption or from exports. And to structurally boost consumption, you need employment. Now, why are today's measures important? Because, as I've been writing for the last year, if you look at the last 20 years in India, India's manufacturing has been becoming increasingly capital intensive at a time when we're undergoing our demographic transition. So just when working force population is rising rapidly the last 2 decades, capital labor ratios, this is ASI data, have continued to go up. Right? So the whole focus has to be, how do you redress the balance between capital and labor? I think today's steps are an important first step in doing that. How do we incentivize firms to hire more people and undertake less machines? Now, you'll need efforts both on the demand side and the supply side. And we saw some of that today. That there are some demand measures for firms. There are some supply measures. Skilling is important. Education is important. To be fair, this is 1,000 small steps, but some really important steps have been initiated. And I think today, the signaling is really important, that the focus in the next few years is going to be on employment, on skilling, on education, not so much on fiscal 0.5% here or there, but on what are the structural measures to redress the capital labor balance.
Okay, point taken. Sajid Chinoy, thank you very much for sparing time in what must be a very busy hour for you with client calls. But the point is that the needle has been moved on where it has to move. And just to add to what Sajid said, we should have been a country where labor has a huge advantage and therefore more labor is employed per unit of capital. What we were actually seeing in India, as Sajid points out, is for every unit of output, we are actually employing more capital than even some of the capital-rich countries and labor-scarce countries. So this capital intensity has to be moved away, and therefore the incentives given to employing more people is in the right direction. Now, how will it play out? Whether people will set up more hospitals will not depend on the subsidy. It will depend on the demand.
Absolutely.
So the point is taken that ultimately the economy has to show that demand growth, but the government has definitely done its job on skilling.
Okay, well, we'll take a quick commercial break here. We'll come back. We'll touch upon individual stocks and sectors which are moving. Ramdev Agarwal, chairman and co-founder at Motilal Oswal, is also going to be with us on the other side. We continue the budget conversation. Stay with us.
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes.
Okay, welcome back. Markets are down just 75 points. And, it's quite incredible, I have to say. Capital gains taxation, worst fears come true. Market sells off 400 points. And within 2 hours, not even 2 hours, we are basically down just about 1/3% or so. Big recovery. One of the big reasons why that recovery is happening, of course, is ITC. Mangalam is standing by. So there is ITC. where there is no change which has happened, and there are jewelry companies like Titan which are rallying on the back of changes which have happened. Mangalam is here to tell us the exact implications for both these sort of sectors and companies as well. Mangalam, take it away.
Well, from what we know of the budget so far, two things are clear. It's a positive for both gold and gold flake. Why do I say that? Well, for starters, Titan is the top Nifty gainer because the basic excise customs duty on gold and silver has been reduced from 10% to 6%. And don't just look at it as 10% to 6%. If you take into account the incidence of GST, etc., the effective tax on jewelry actually is down from 18.5% to a little over 9%. So on that ticket size, it makes a very big difference. Remember, this ahead of the festive season and ahead of all the key wedding dates that are there in the second half more than the first half is a big positive, especially after a dismal first quarter performance from Titan on account of lower wedding dates and poor consumer sentiment along with rising gold prices. This bodes well for them, as a result of which this is a positive for Titan. More so for Titan than the others is because Titan does not sit on any unhedged inventory on their books. So any reduction in prices immediately benefits them, protects them from any inventory losses as well. The second part, ITC. As always, no change is good news for ITC. But this time around, that was expected. But more importantly, any improvement in rural sentiment would aid their non-tobacco business as well. That makes it positive. What also makes it more attractive is the fact that over the last 1 month, irrespective of the move that we've seen in the stock price, over the last 1 year, the stock is absolutely flat, making it trading at close to around 26 times 1 year forward earnings, which is at a discount to, not only the FMCG index, but a lot of the other tobacco players which have seen a big surge as well. And finally, we have a big move on both gold and gold flake.
Right. I think we have Prime Minister Modi. Mangalam, thanks for that. Prime Minister Modi on the budget. Let's listen it.
पूरी टीम बहुत बहुत बधाई की पात्र है। साथियों, ये बजट समाज के हर वर्ग को शक्ति देने वाला बजट है। ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है। पिछले 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। ये जो न्यू मिडिल क्लास बना है, ये बजट उनके सशक्तिकरण की निरंतरता का बजट है। इन नौजवानों को अनगिनत नए अवसर देने वाला बजट है। इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी। ये मिडिल क्लास को नई ताकत देने वाला बजट है। ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है। इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी। इस बजट से छोटे व्यापारियों, एमएसएमईज को, यानी कि लघु उद्योगों का, उसकी प्रगति का नया रास्ता मिलेगा। बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है। इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी। साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग ही है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट्स इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है। इस बजट में टूरिज्म क्षेत्र पर भी विशेष बल दिया गया है। साथियों, एनडीए सरकार ने पिछले 10 साल में ये सुनिश्चित किया है कि गरीब और मध्यम वर्ग को लगातार टैक्स से राहत मिलती रहे। इस बजट में भी इनकम टैक्स में कटौती और स्टैंडर्ड डिडक्शन में वृद्धि का फैसला लिया गया है। टीडीएस के नियमों को भी सरल किया गया है। इन कदमों से हर टैक्स पेयर को अतिरिक्त बचत होने वाली है। साथियों, देश के विकास के लिए भारत के पूर्वी क्षेत्र का संपूर्ण विकास पूर्वोदय के विजन द्वारा हमारे इस अभियान को नई गति, नई ऊर्जा मिलेगी। हम पूर्वी भारत में कई महत्वपूर्ण इंफ्रास्ट्रक्चर जैसे हाईवेज, वाटर प्रोजेक्ट्स और पावर प्रोजेक्ट्स का निर्माण कर विकास को नई गति देंगे। साथियों, इस बजट का एक बहुत बड़ा फोकस देश के किसान है। अन्न भंडारण के लिए दुनिया की सबसे बड़ी स्कीम के बाद अब हम वेजिटेबल प्रोडक्शन क्लस्टर्स बनाने जा रहे हैं। इससे एक और छोटे किसानों को फल, सब्जियों, अन्य उपज के लिए नए बाजार मिलेंगे, बेहतर दाम मिलेंगे। तो दूसरी ओर हमारे मध्यम वर्ग के लिए फल, सब्जियों की उपलब्धता बढ़ेगी और परिवार के लिए पोषण भी सुनिश्चित होगा। कृषि क्षेत्र में भारत का आत्मनिर्भर बनना समय की मांग है। इसलिए दलहन, तिलहन की पैदावार बढ़ाने के लिए किसानों को मदद की घोषणा की गई है। साथियों, देश में गरीबी समाप्त हो, गरीब का सशक्तिकरण हो, इस दिशा में भी आज के बजट में प्रमुख घोषणाएं की गई है। गरीबों के लिए 3 करोड़ नए घर बनाना तय हुआ है। जनजातीय उन्नत ग्राम अभियान सैचुरेशन अप्रोच के साथ 5 करोड़ आदिवासी परिवारों को मूलभूत सुविधाओं से जोड़ा जाएगा। इसके अलावा ग्राम सड़क योजना 25,000 नए ग्रामीण क्षेत्रों को ऑल वेदर रोड से जोड़ेगी। इसका लाभ देश के सभी राज्यों के दूर दराज गांवों को मिलेगा। साथियों, आज का बजट नए अवसर, नई ऊर्जा लेकर आया है। ये ढेर सारे नए रोजगार, स्वरोजगार के अवसर लेकर आया है। ये बेटर ग्रोथ और ब्राइट फ्यूचर लेकर आया है। आज का बजट भारत को दुनिया की तीसरी सबसे बड़ी आर्थिक ताकत बनाने के उस पूरी प्रक्रिया में कैटलिस्ट का काम करेगा। विकसित भारत की एक ठोस नींव रखेगा। सभी देशवासियों को बहुत बहुत शुभकामनाएं।
Right. Well, that's Prime Minister Modi really sort of laying out the vision and the intent behind all the announcements which have been made in the budget. Gautam Trivedi is now with us. He's, of course, manages Nepean Capital. Gautam, great to have you with us here on the program. Appreciate it. I have to say, it's quite incredible. The market briefly traded in the green. We kind of fully recovered that 400-point cut of the Nifty. We went back into the green, and now we are flat, down about 40 points or so. So actually, the reaction on a day when capital gains taxes on equities have increased is even better than the 4th of June, when you had that election surprise, when the market was down significantly, right? Unimaginable 10, 15 years ago, actually even 5 years ago, but that's the kind of market we are in. Gautam, your thoughts on, of course, what you're seeing on the market, but more importantly on the taxation bid itself. What does it do beyond today?
Frankly, I like the budget, and I think maybe a bit of a minority given the way the market's reacted. But the fact is, it's not populist. Strong emphasis on infrastructure, agri, bringing back hopefully rural demand. So I think the entire debate, and I've had this, since 12:30 or so when the budget ended, till 5 minutes ago, I've been on multiple calls with friends in the industry discussing the short-term capital gains tax increase to 20%. Frankly, I think it's a good move to cool down the market. The market needed some sort of a indication from the government. The SEBI chief, of course, has been talking about it for the past few weeks. I hope that now the SEBI ends up also carrying forward some more strictures to rein in the F&O market, rein in, of course, the overall excessive speculation that's going on in mid and small caps. So, sorry, go ahead.
Yeah, Gautam, I guess the market has taken a very sanguine view of everything that's happened. But let's say usually sort of, news of this magnitude is digested over a couple of sessions. So my question really is that let's move beyond tax for a minute. I think the market was prepared for a tax hit to be delivered, and it was delivered. So maybe to an extent it was getting factored in. But even if we move beyond, the capex numbers have not changed. They are where they were in the interim budget. So that kind of a major bazooka is no longer coming in. And obviously there is a lot of stress on social sectors, on agriculture, on MSMEs, etc. The question is, what from here? I mean, the dips are getting bought on the assumption that this market will just keep running on steroids. But do you think that's going to be the case?
Yeah, so I think you make a fair point, Surabhi. The fact is, I think the fund flow is not necessarily going to significantly slow down just because of this 20% move on the short-term capital gains tax. And the fact is that new investors are entering the market. Newer investors are discovering the equity markets. And, I think the fact is, as I said earlier, the government and the SEBI will have to bring in some degree of curbs. I don't mean kill the market, but basically bring in curbs that will shift the momentum away from speculation to long-term investment. And that's really what this market needs. But having said that, the future of this market, as has been the case for the past 3 years and for the next 10 years, a lot of it will be focused on fund flows. So if the fund flows from the domestic side were to slow down, hypothetically, let's assume for a minute if that were to happen and valuations start to cool off, I see money in a big way coming in from foreign institutional investors.
Gautam, hi. A quick word on real estate. That's a sector which is taking the biggest knock today. The Nifty Realty Index is down over 3%. Your quick take on what's been announced. Is it time to book profits in real estate stocks because they've had a fantastic run? And is it going to be incrementally very negative, the fact that on long-term capital gains, even though the tax rate has come down to 12.5%, there is no indexation. So on the margin, how negative is it?
Well, it is negative for people who are sitting on properties. Let's assume for a minute your grandfather bought a property in Midtown Mumbai, as an example, 50 years ago for 1 crore. And that's now valued at 30 crores, as an example. So you're paying now 12.5% on 29 crores if you were to sell that property, that asset. So I think that for legacy properties, obviously, is a negative. But having said that, there are a lot of first-time buyers or people moving into newer homes, and prices are pretty elevated at this point of time. So if you're looking at 10 years out of what property prices will be in the neighborhood that you bought your property, that's a very longer-term view on where the real estate market could be. So my view is it will impact legacy properties and less so newer acquisitions.
Well, take that point, Gautam. It appears very, very negative for those legacy properties. Earlier, they're getting the benefit of indexation, and now that goes out of the window. It could impact, a severe amount of tax it could be attracting. Well, let's get in Dharmesh Mehta as well of DAM Capital. Hi, Dharmesh. Good afternoon, and always good to see you on the show. Tell us your first take, first of all, on the budget. Taxation, you asked, I think, 9 out of 10 people, they said they won't tinker with the STCG or LTCJ. They've done that. Your view?
Well, the bigger disappointment is that you increased the long-term capital gains, but you didn't remove the STT, which was in lieu of long-term capital gains. So first we brought in long-term capital gains, which was not there. Then they increased they brought in STT that time. Then we moved it to 10%, and now we moved it to 12.5%. Ideally, they should have removed the STT part, but it is what it is. It's 25% rise in long term, so it's a big hit to the markets. But people don't come here for 2.5% increase or decrease in the tax gains. Basically, people come here if they see they are going to make money in the long run. So this whole negative impact on the taxation will be forgotten in next 2 days, and markets will be back to normal. And people will start looking at the economy and what kind of growth profile we have and what are the valuation in the market. So the taxation is negative, but it'll be forgotten in next 2 days.
I mean, Dharmesh, if I can dare say, I think people are already shrugging it off. The market traded in the green and, unimaginable, right? I mean, sometime back, the fact what has happened and how the market is reacting. So incredible resilience. There is no two ways about it. I'm going to come back to you, Dharmesh and Gautam. Let me welcome in Ramdev Agarwal as well, Chairman and Co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. You know, when you were with us on the program, you were jokingly saying taxation always is a googly, and we don't know. And one hope you're saying you hope nothing is done, things are going great, etc. It's both have been done. Everything has been done. STT on FNO and short term, long term. Your view in terms of how this changes anything, if at all.
Yeah, so we are open to tinkering of everything any point of time. So there are two things. One is capital gains, and then second is the capital gains tax. So markets are all about capital gains, and that story is not impacted. The good thing is that capital gains per se will happen irrespective. And then once you have the capital gains, then whether short term, long term, speculative, then you pay a little more. So I think as far as the market side is concerned, where capital gains are made, I think that is pretty much protected. That's what I would think, because capital gains is about corporate earnings growth, liquidity flow. I mean, those things, that story is very intact. So I would think that they are looking at it, that the real boom is happening in stock market, and hence let's take cream off the top, and they have increased the long term, short term. I think speculative gains, in any case, they are taxed at the marginal rate. There is no more scope. But I think the biggest story is about the buyback. If the buyback tax has been abolished and it has to be taxed in the hands of recipient, in that case, all the buybacks will go, instead of 20%, it will go to 12.5%. So where is the dividend now? Which management would be encouraged to pay dividend and get taxed at 38%? So I think there is going to be a massive arbitrage between 38% and 12.5%. So let's see. I mean, we have not seen the fine print. Only abolition of buyback tax has been removed. So it will be in the hands of recipient, but let's see, I mean, what is there.
You know, Ramdevji, actually I was looking at the fine print because I was looking at a lot of these tax issues that have happened. The fine print says that buybacks are going to be taxed as dividend in the hand of the recipient. And what is the prevailing regime for dividends? It is the slab rate. And the highest slab rate for, high-income earners is, 38% right now as per the new regime. So I think the current interpretation is the arbitrage is completely gone. Even if you want to enjoy income from buybacks, you have to pay 38% tax. I think the difference is that what they're saying, that the cost of acquisition of that share that you'll eventually tender in the buyback, that will be treated as a loss. So you can offset that loss against your other capital gain. That's the fine print that I got. I mean, speaking to a lot of tax experts after the speech. But my question, just to come to Mr. Agarwal's earlier point, sir, you were saying taxes are fine as long as there is capital gain. So let's address that. Does the rest of this budget give enough impetus for this market to really move into a new trajectory? The flows are there. We've discussed that with you. You're saying taxes can be handled. But what about, a fresh impetus?
Yeah, so that is due to the corporate earnings. So they have done nothing which will hurt the corporate earnings. If anything, because there is a dole out to all sections of society, I think there will be some impetus to the consumption, which in any case was reviving from the rural side. That's what RBI governor was saying. The revival was there, and with a good monsoon and hopefully little lower interest rate. I think, and the handouts which we are seeing across through the standard deduction and restoration of rates, I think there will be some money in the 25,000-30,000 rupees in everybody's hand to spend more. So hopefully there would be some, at the margin, some impetus to the consumption.
Ramdev, this is Rima here. Did you speak to any foreign investors? What is their take? Because for them, the post-tax attractiveness of the Indian equity markets comes down, especially when you're competing with other emerging markets where you don't have long-term capital gains tax to begin with.
Yeah, again, I think it is a capital gains tax, but I think like any other investor, they would also be more interested in the capital gains first and then capital gains tax. So if the macro story of corporate earnings growth of about 15 to 17% that remains intact, I would think that this negativity which has developed for few hours right now, it will be shrugged off maybe in a day or two. That's my thinking.
But Ramdev, the problem is, FIs were sellers till say 2 months ago, and you had made this point, they'll come in and they'll come in at higher prices. They did, and suddenly out of nowhere this taxation comes.
Yeah.
It could derail the story a little bit, because in the last 1 month or so, India's been standing out. We have even got a couple of $1 billion. Other emerging markets, actually, they've seen selling. You expect them to keep the faith and they'll take it in their stride?
I would think so, because see, right now the story is that of not capital flow of foreigners. It is the more of the domestics. And actually for last 2 months, domestic flow has been record flow and investment has been very low. Actually, if you see the July month, domestics have not bought anything. And even in June, I think they bought little, but the flow has been extremely robust. So all the mutual funds are sitting on very good quantity of cash across the schemes, maybe 5%, 7%. So ahead of the event, knowing that there is going to be bad tax proposals, everybody was sitting on fence. My sense is that if the corporate earnings are not impacted, they have to come and buy because the flow is still on.
Yeah.
So it is the domestic flow which is going to decide the fate of the short-term direction of the market rather than the foreigner flow.
Right. No, got that. And it is all retail. I mean, Nimesh had put out a piece, I think this was last Friday, that mutual funds are sitting on some 1.25 lakh, crores on as far as cash levels are concerned. I mean,
but he also made the point that that's still about 5% of the AUM. It's just that the AUM has become so large that a 5% is still a mighty 1.25 to almost 1.5 lakh crore.
And it takes a lot more to move an index at 24,000. So yeah, I mean, that point is taken. But yeah, mutual funds are sitting on cash. Ramdevji, just a quick word on real estate. This entire indexation benefit being taken away. I know you're not a big fan of sort of real estate in that sense, for other reasons. But what is your sense?
Incidence of tax. I think they don't have any intention to give any tax break to the guys who are making capital gains. They have definitely increased the taxes for anybody who has got the capital gains, whether it is the real estate, whether it is shares, everything. So, so I'm quite sure it will be detrimental to every asset class if you look at from the prism of capital gains.
Dharmesh, just react to those 2 points. One is attractiveness, as Rima was saying and Ramdevji was also pointing out, from a foreigner perspective, how does this LTCG hike make any impact? Does it have any impact? And second is the change for real estate. What are the implications in your view?
See, as Ramdevji rightly mentioned, people come here for capital gains, not worry about what tax they pay. So if they see they can make decent returns of 20, 30% or more, they're happy to pay more 2.5%. And generally, the long-term FI holders don't come in any country just because of tax benefits. First objective is to make money. I think so that story is intact, as Ramdevji mentioned, and I think so government has not done anything which derails that story. Now, just one more point on the buyback. When we were talking about buyback taxation issue, I'm still confused what happens if a company announces a market buyback.
Correct.
Nobody knows whether you're selling in the buyback or you're selling in the market. Yeah. So what you may see is that the tender may shut down, but the normal buyback may continue. In fact, this is a good positive news for actually companies to do buyback from the market now. Because then they're going to be taxed at a lower rate and the investor will be taxed at, if it's long-term, at 12.5%. Not the 40% dividend tax which they are paying.
So if you're selling in the market, you get taxed and you don't know who's buying on the other side. So both seller and buyer used to end up paying the tax, right?
Yeah, but I'll pay a long-term tax, right?
Yeah,
won't
correct.
Pay dividend tax or 40% tax.
Correct.
In fact, I'm happy to sell in the open market and instead of in the lieu of the buyback through tender route. This is what I understand from the fine print. They're not mentioned what happens when you sell in the market.
Okay.
So you just shut down a tender route, buyback route, nothing else.
Okay, so buybacks through the open market. And in fact, that was one of the asks that, do away with this so that that confusion sort of doesn't exist. But what we've got is a very different facet. Dharmesh, just the point on real estate as well, till there's further clarity and absolute clarity on this indexation piece. I mean, what's your sense? To any extent, does it lead to a slightly more medium-term cool-off when it comes to property stocks? What is your expectation on this?
As I understand, the newer properties won't get impacted, right? It's the older
Correct.
property. So if I'm buying the newer companies, I'm buying for the new projects they're launching, not for the old ones which they have. So this is bad news for the individual owner, which owns because of ancestral property or he's been owning from last 10, 20, 30 years. But the new projects coming in won't be, getting that tax issue.
So you think that this is...
in the coming budgets, that can change also eventually.
So you think this is more of a knee-jerk? Because, I mean, the overall announcement seemed a little negative without indexation. But you think this is more of a knee-jerk from a, real estate stock point of view?
Yes, the stocks you're buying are for the future growth rather than the past.
Okay.
Got it. Ramdev, any other sectors your team is highlighting? I mean, there's something done for gold. Stocks are rallying. Any other sectors come to mind?
I heard the entire budget speech. What we could figure out is that, of course, the gold jewelry has become, I think, the taxes have gone half in that, from 18% to, if I tell you, 9% or something. I think your own analyst was saying that.
9%.
So that was one, but basically there is no relief anywhere. I mean, there is no freebies anywhere unless something by mistake, like this buyback thing, I think the buyback thing, if you do the open buyback in the marketplace and you surrender shares and you pay 12.5, I think it's the end of dividend. I think just the arbitrage is too big. And the dividend is not decided by small guys. Dividend is decided by the management. So if the management has to pay 38% of the dividend and if you have to pay 12.5 for the buyback, I don't know what will be the story of dividend. So I think it's a much broader issue, much bigger issue, because in dividend discount model, dividend is everything for the market. So it's a big thing. I think the subject, whatever they might have proposed, even if there is some loophole or unintended benefit which we are seeing, I think they will try to plug it and make it as tax intensive as the dividend is right now. So once that is done, then there's no arbitrage. Otherwise, there is a massive arbitrage.
Right. Ramdev, since you're saying this is a big issue and a broader issue, can you, in very simple words, explain what has happened and what is this arbitrage? I mean, how does this work?
Yeah, so, dividend is decided by the management.
Correct.
Now, management declares dividend looking at their own corporate tax rates. Okay, they pay 38%. So if they can buy back they can surrender some shares and buy it back through the company money at 12.5%. So they would do that. No, one thing is it reduces the number of shares in any case. So the EPS of the future outstanding shares in any case go up. Is the healthiest thing to happen. But I'm doing both the things right, in the sense that I'm cutting my tax rate and I'm reducing the number of shares in the marketplace while holding the same percentage of the company. So I think it's a huge arbitrage. I think let's see in what form finally it comes. Right now it is just a proposal, abolition of dividend distribution tax. But when it is in the hands of recipient, how the exchequer is defining it so that there is no arbitrage left between dividend and buyback. I don't think they have intention to make buyback very attractive in the hands of management vis-a-vis dividend. That is not the intention at all.
No,
but let's see in what form it comes.
No, I completely take your point, sir, because if that is sort of a backdoor route that the market tries to sort of come up with, perhaps we'll see more action from New Delhi in the annexures and the subsequent sort of prints that come in. And remember, I mean, the budget still has to be passed, and a lot sometimes happens when the final sort of passage is happening through Parliament. Dharmesh, one more point. Now, angel tax has been completely abolished. Of course, you're in the deal market. You bring so many companies to the listed space, right? It's becoming very, very simple now, once again, for startups and unlisted companies to go back and raise capital in the private universe. Should this have any bearing on the IPO pipeline funding appetite? Because this is, I mean, I think they've got, amongst most participants, they've got the best deal. The whole tax has been taken away.
In fact, there's one more, tax announcement which has happened, which we are still trying to check, saying that, the unlisted segment now will be taxed at the long-term capital gains. So basically now, if you're selling before your IPO, you'll still be paying only 12.5%.
Absolutely.
Which was not the case right now, which was 20% right now.
So the private equity markets become very interesting, right? From an investor point of view, I had to write, I mean, up till now it was 2 years of holding and paid 20% long-term gains on unlisted shares. But now it's 12.5%. So listed, unlisted is at par at 12.5%. What implications, what do you foresee in the coming weeks and months on the private equity side, both from the company standpoint and the investor appetite standpoint?
See, it becomes very attractive for private equity guys now to invest in companies because they get an exit route even before the IPO and at a much lower tax rate. So in that sense, it's very positive for the country also because more money can come in prior to an IPO, which is much required. So that overall, actually, it's a positive thing for the inflows to come in this, and this will be more long-term money rather than short-term money coming in.
Yeah, no, got that. I think we'll wrap it up here. Dharmesh, thank you very much for speaking on this important day. Appreciate your time here. Ramdevji, great having you with us. Appreciate it. Gautam, appreciate you joining us as well. Thanks indeed. We'll take a quick commercial break, but you are watching our budget coverage from the CNBC TV 18 Motorola Oswal studios. We'll have Nilesh Shah, Envision Capital with us. He's right here. And Nilesh, thanks for waiting. We're going to come back after this break and continue the budget conversation. Stay with us. All right, welcome back. We were talking about how the Nifty had earlier come back into the green. Let's put the index up. We are 12 points higher on the Nifty. So just an incredible reaction. Who would have thought? I mean, at 9 o'clock, 10 o'clock in the morning before the budget, if you'd have told someone, well, this is what is coming and, what the market reaction is going to be, I don't think anyone would have said, we're going to be in green by 2:30 or 3 o'clock or whatever. So is this that kind of a market?
Prashant, I'm sure you remember when we first had the 10% capital gains tax and it was introduced in this country, it was 2018. We saw the market reaction, the jitters, the mayhem, the hue and the cry and the fall in share prices, right? Cut to 2024, I think we're in an absolutely different market.
Chris,
is this a day when capital gains tax has been increased? Is it really the day?
Looking at the market, you would know. I mean, you just cannot tell. Let's welcome Nilesh Shah as well, Managing Director and CEO at Envision Capital. Is with us. Nilesh, good to have you with us here. Just incredible, right? The reaction.
Absolutely. I think it's good. I think that it's good that the market has been able to absorb the hike in capital gains tax and some of the other provisions which have come in. So I think it's a big positive. It just shows that there is liquidity waiting in the wings. Any dips are being used to kind of buy into. Today's been a day not necessarily like the way it was on the election day outcome, where there was a sharp cut and then again a strong pullback. Today's a bit of that, but not to that extent.
I mean, if this reaction stays, the government would be thinking, thoda kam kiya hai.
And even STT, the STT rates have been practically doubled.
But that's for F&O. Yeah. See, I think there was also a bit of expectations that there will be hikes, be it STT or be it LTCG. I think there was some bit of expectation, and there were some which are probably in some bit of denial as well. So I think, yes, there's been a knee-jerk reaction to this, but then it's finally, again, business as usual.
Okay, all right, Nilesh, let's talk about stock sectors now, because now we look ahead, right? It's all about earnings, as even Ramdevji said. What do you like? The budget is digested. We get back to tracking earnings, global developments as well. The themes you liked, and will you alter your strategy?
So I think, Nigel, clearly, if I were to kind of look at the earnings season so far, tech essentially has been the place where there's been the maximum amount of surprise. And leave aside the top tier tech companies, but down below, the smaller tech companies have delivered far better numbers. So I think that continues to be a extremely interesting space, number one. Number two, if I were to kind of just look at the budget today, there are huge positives for MSME lending, in the sense huge amount of encouragement there. for MSMEs, as well as the huge focus on urban housing. So that takes me to affordable housing finance companies or NBFCs focused on lending to MSMEs and giving out business loans. That, I think, is again becoming a pocket which has been strong so far. I think it just becomes more stronger with this budget.
All right, Nilesh, what was your view on real estate, prior to this event? Because for those who are holding those legacy properties, it's come out of nowhere. One would compare it to maybe an indirect inheritance tax, because all of a sudden you've got a property that's gone up multiple times and you were sitting easy, you're saying that I'll use the benefit of indexation. That's gone out of the window. So your view on real estate stocks?
So I think it doesn't have too much of implications for real estate stocks because they are dealing with new inventory and selling it to a fresh set of buyers who've got nothing to do with it.
Right.
If at all, it's actually a boost for them because probably the guys who are selling may not want to sell real estate.
Okay.
Because now you are going to encounter a fresh set of taxes.
Right.
You don't have the indexation benefit. So if you sell, you probably might end up paying a higher rate of tax. So probably they might just kind of take a step back. Let me see, may not sell. So to that extent, it's quite possible that the secondary market in real estate may kind of dampen a bit.
And then the primary market. So
and the primary market essentially gets a new lease of life.
Interesting.
So maybe a day or two the market may take to absorb this and it might look sentimentally negative for real estate stocks.
Interesting.
But I think post that, it might actually lead to a fresh wave of demand for them.
Interesting.
Nilesh, is there anything in the budget because of which you will increase your weightage on consumption? Disposable income has gone up. There is a thrust on job creation. So post the budget, would you look to buy more consumer-related stocks? And which ones?
The only consumer-related sector which benefits quite phenomenally with this is the jewelry space. Okay, so across the board with the cut in customs duty, gold prices have corrected. That should essentially bring back demand. Also with increasing disposable income, essentially you basically want to allocate more to areas like jewelry, which is slightly more aspirational. Okay. So I think that's one sector which stands out.
But that sector or, some companies there are also facing competitive headwinds. So how do the two offset each other? And would you buy today? Would you recommend buying a Titan today, for instance?
I think jewelry is also facing the same fate as IT or private banks, where the big boys are facing competitive intensity. Their growth rates are no longer in double digits. They're getting relegated to single digits. There's already ownership in that space. But the tier 2 names, be it banking, be it technology, or be it now jewelry or some of the other consumer spaces, they essentially are able to grow at a much faster pace, and therefore fresh allocations are getting into the tier 2 names versus the tier 1 names.
I just want to highlight that broader markets are also very positive, and maybe we should just take a minute to highlight some of these large movers. Right? I mean, jewelry, of course, we've been highlighting. Look at something like an Angel One, right? Again, what was the fear? Taxation and regulation, etc. All of that has sort of come to pass. Stocks up 5.5%. To be fair, you could kind of look at it that, well, it's out of the way now, although not entirely, because on F&O, I think we'll still see something from the market regulator, SEBI, later, perhaps. But, that one is a big volume-led gainer. Then team lease is up about 11.5. There is a lot of talk about sort of skilling and staffing, etc., incentives to companies to hire more in the formal sector. Team lease is seeing a big 11.5% move. You got a few other sort of large gainers. MapMy India is up about 9%. I'm not sure if there's anything there. Nilesh, is there something?
Yeah, so I think it's got to do with the digitization of the land records.
Digital public infrastructure and kind of mapping.
One is DP, and then there was a specific mention of digitization of the land records.
Okay.
So clearly that means more business for companies which are into geospatial technologies.
NCC is another one, right? That package for Andhra, etc. NCC is up 10%. Stocks at about 347. It'll come up on your screen. You track this one, this space, construction?
No, honestly don't track it. No.
Nilesh, I just wanted, since we were talking about the jewelry stocks, I wanted to get that segment out of the way. We spoke about the stocks, but I also wanted to ask you about the financiers, the gold financiers. Since gold prices were moving up, I thought the indirect way of playing it was through the financiers, and things were looking pretty okay. Muthoot trading at 2.2 times. I think Manappuram was around 1.2 times odd. Suddenly, out of nowhere, these gold prices could come down because of the cut in duties. And in reaction to that, those stocks are getting a hard clonk in today's session. Your view on it?
Yeah, that's a bit paradoxical, Nigel, because when gold prices go up, the opportunity for them increases. But when gold prices comes down, the risk for them increases.
Right.
Because they have challenges of collateral, whether they have enough margin,
Indeed.
especially on a day like this where gold prices have kind of got shaved off.
Yeah.
They could have higher levels of risk if they don't have enough security. So yes, I think that's a bit negative for them. But again, I think these are things which just take a day or two for adjustments. And after that, it's again business as usual.
You know, let me ask you, what happens to the poster boys of the market? PSU, railway, defense, because I mean, there's no major increase in capex, but like Ramdev said, there's nothing materially negative also. So now this huge bogey that's been running for the last 1 year, what happens to this?
I think the fundamentals are still strong. The challenge is valuations. You know, many of them are now quoting as if they are like kind of those perma-growth stocks, long-term technology creators types.
Yeah, disruptive, like changing the world with
and,
almost like AI, right?
Absolutely, you know. So it's hard to differentiate between railways and AI or railways and data centers.
At least that's how they trade.
That's right. So I think that's where the valuation, I think the risk is valuations, but not the underlying fundamentals.
You know, we should put the railway stocks up. Just look at these names, if you can quickly pull them up. RVNL is down 5, IRFC is down 4, Ircon is down 8, Railtel is down 5. So yeah, that's the but a lot of other PSU names. Mazgaon Dock is down about 4%. So at least today, and mind you, this is, you know, these stocks do sort of go into a bit of a sell-off once in a while, but that usually lasts a day, 2 days. That's the history so far.
Counting day as well, right?
Counting day as well. Yeah. So you know, the shipping companies, Mazgaon is down 4. I think Shipping Corporation, Garden Reach, they're all down between 4-5%. Shipping Corporation is down 6.5% as well. So.
Even defense names, BEL, for instance, is down over 3%. So the entire PSU cohort is under pressure across railways, defense, shipping, etc.
I think the PSE index would be the sort of biggest loser at this point in time, 1.25% lower on the CPSE index. Nilesh, any trades come to mind beyond today?
No, I think it still is going to be business as usual. I still believe that it's going to be the growth stocks which essentially kind of come back because that's what market is going to be looking out for. I think there's a fair bit of froth which is there in some of the PSUs or some of the cap goods side where stocks are trading at astronomically high P multiples. I think they'll continue to witness pressure. There is kind of probably a bit of over ownership out there as well. So you're going to see money being taken off the table. You could see unwinding and money go back into the conventional growth space.
So just to complete that point on rotation, while cap goods come under some pressure, the FMCG trade and the same thing happened, right? On counting day, it was all about the FMCG trade, but there was no follow through. Do you think this time it's going to be different? Because there are incentives that have been given, sweeteners that have been given to middle and the bottom of the pyramid.
Yeah, so probably they could stand out. But I still believe that there would be the space which is more likely to do better is going to be the discretionary space, the premiumization space. I think the aspirational space. I think that space will continue to do a lot better versus the conventional staples.
Okay, all right. Nilesh, request you to hold on to that thought. You know, we have the real estate space that is calling for our attention, and Sonal joins us to fill us in with a quick analysis on that one. Sonal, the stocks are still down. They've come off a little bit from the low point of the day.
Oh, yes, they have. But, you know, the news that has come by, that is in terms of the long-term capital gains tax rate that has been changed. It's a big cut that we're seeing, 12.5% versus 20% earlier on any property sale. However, the indexation benefit, that has been removed, and that is something which spooked the street when the initial announcement was made as well. This short-term capital gains, they stay at 20%. And the time period for property is 24 months and more, that is long-term, and anything below that is short term. Now remember, we have seen this big real estate rally in last 5 to 6 years as well, but the legacy houses, that is something, the legacy properties, that is something that could see an impact because you will not be able to adjust for inflation in terms of cost of acquisition. Then that would mean the tax outgo for any seller would be high, and that is something which is worrying the street in terms of maybe people will not like to buy houses, but of course that is the initial sentiment, but it has come in as a negative, and that's why this reaction on the stocks today.
Hey, thanks a lot for that, Sonal. Well, let's get into that conversation for the detail. We have Mr. Niranjan Hiranandani, founder and MD of Hiranandani Group, who joins us on the show. Hi, sir. Good afternoon, and thanks a lot for joining in. Well, the street is a little bit confused with regard to this. For the time being, it's appearing as a negative because long-term capital gains, that was 20%. It's come down to around 12.5%, but the indexation benefit is gone out. But the other way of looking at it is maybe supply gets curtailed, which in turn will be a positive in demand for new homes. How are you viewing this?
We view it very positively. We've been asking for matching the long-term capital gains tax with the capital markets for a long period of time. So historically, those who are investors into the capital markets or also in the case of real estate always looked at this differential of 10% to 20%, which was there in the investments into real estate. So I think the investor market will come back into real estate because of the long-term capital gains tax now being 12.5%. Yes, but for historical properties which are coming into the market, yes, they will have to pay much more for the purpose of it because indexation is sought to be withdrawn. So I think there is an issue of property sale which takes place. But anyway, I think 90% of the investor market would benefit from the reduction in the rates of capital gains tax. And I think that's a very positive move as far as this is concerned. The other part of it, which is very important for the investor market in the long run, is the issue which the finance minister has said she's going to emphasize to the state governments to reduce stamp duty and also other charges which are levied by the local authority and the state government, which is causing an inflation in prices which is unprecedented. So, for instance, in Mumbai, if you take 50% of the cost of expensive homes, they are all part of taxes, whether in terms of stamp duty, whether in terms of development charges, additional FSI which is there, all these costs are there. And that is also a thought which has come over there for the purpose of it. But affordable housing, those segments which comprises today a large part of the market throughout the country, is going to see a boost, 11 lakh crores. And I think focus urban areas, 1 crore housing in the affordable segment. We have to read the fine print as to how this is going to be done. Is it the same way? Is there a cap on the value of the flat, which was earlier 45 lakhs, which we expected to increase to 75 lakhs or 1 crore in order to benefit into metropolitan towns like Mumbai, Delhi, Calcutta, Madras? And overall, I do believe that interest rates, hopefully in the next year, with inflation coming under control, I think long-term investment into real estate will continue and the benefit of capital gains tax will be shown for investors to come back from the capital markets to the real estate market.
Mr. Hiranandani, sir, just one quick clarification. For older projects, legacy homes which were bought in the 1970s, 80s, 90s, do the prices get reset to, say, 2000, 2004, as we were made to understand? And from there, the capital gains tax would be calculated at 12.5%?
No, now the reset will not take place, as you have asked. It will be counted on the basis of the cost of the house which took place when you purchased the house. So that is the negative part of it. So in reality, for those homes, when they are sold, they will still have to pay a tax. But if it is a single house and you resell it and you utilize the entire capital gains to buy a new house, then of course there is no tax in terms of it. It will be exempt from taxes. So there are various regulations to be done in terms of legacy homes. But legacy properties which are on sale will certainly have to pay a higher long-term capital gains tax because some of them are inherited properties, old properties. So there will be no other benefit that will be there. There, the taxes will definitely be higher.
Okay, all right.
But all in all, I think real estate should go on the upside.
Okay, all right. Thanks for that perspective, Mr. Hiranandani. Always great to get that. There's about 30 minutes to go, a little over 30 minutes to go for market closing. We're up about 13 points and we're trading in the green. We'll take a quick commercial break here. We're going to come back. We'll have Jigar Mistry with us. Samir Arora will be with us as well. And many more perspectives in terms of what's happening in the market and what the budget does for individual sectors. Stay with us.
Including barrages, river pollution abatement and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,000.
Welcome back. Absolutely flat on the headline indices. Mid-cap index is still down about 0.5%, but there has been a big recovery from that initial blow that came through just after the speech. We have Jigar Mistry of Buoyant Capital now joining into the conversation. Jigar, thanks for joining in. It's quite astounding, right? That's what we've been discussing, that this market has the appetite to digest almost anything. Election upsets, tax increases. What do you make of things? And, what would your sort of first thoughts be on what we've seen today?
Yes, good afternoon, Surbhi. So I think in terms of the broader math, I couldn't really make a huge difference between what the numbers were presented earlier versus now, right? So I think other than the RBI dividend, they have broadly allocated that to other revenue expenditure. And besides that, I think there's nothing really to take home. The only other point I could find was that transportation now is somehow the largest item on the RevX besides your interest payments, right? So after interest payment, transportation today is the second largest item. That share has gone up from almost 9% to 12-13%, which is a very large jump. And therefore, I think the businesses that they are doing well will continue in that space. I think the only other thing, if you want to sort of look at this, is that if you pull up the capital gains tax on an individual standpoint, but not on mutual funds, then essentially that will start creating a divide. If this stays at 20 or increasingly it goes up to 30%, then it would inherently make one asset class a lot better vis-a-vis even the alternative space. So I think that's one thing that people can take away from the entire budget things.
Okay. All right. I think, Jigar, good afternoon. Stay with us. We also want to get perspectives from companies which are impacted. We have the management of Senco Gold with us. And we also have the management of Muthoot Finance with us. Mr. Suvankar Sen is CEO at Senco, and Mr. George Alexander Muthoot is, of course, head of Muthoot. Mr. Sen, gentlemen, good afternoon. Good to have both of you here. Thanks very much, Prashant, this side. Mr. Sen, if I can come to you first. So we have a jeweler and we have a gold finance company. The effective tax on gold drops from, including GST, drops from some 18% to about 9% now. Does this spur jewelry sales in a big way, Mr. Sen?
Yes, it would spur jewelry sales in a big way. If we really look at it, the way gold prices have moved up in the last 1 year or so, it was creating a stress and a constraint in the pockets of consumers, especially the upper middle class, to come and buy jewelry. This relief that the government has given to the upper middle class would really enable them to buy jewelry, and we're all very positive about it, that the sales would go up.
Mr. Sen, two quick questions then. One, in your mind, how much do the gold prices come down by? Do you have a number, an estimate in mind? And two, are you sitting on any sort of inventory which could offset this benefit?
So if you really look at it, 9%, on a base of about 60,000, which is the international price, which 62,000 makes it to about 70 to 73,000. So the benefit that the consumers would get is around 590 rupees per gram, or 5,90,000 rupees per kilo. So that would be the extended benefit that they would get. Yes, over a period of time, gradually that benefit would pass on to the consumers. Maybe initially the benefit would be of 300 per gram, 350 per gram, and gradually move on to 550, 600 per gram kind of a benefit. That is number one. And in terms of the hit on the inventory valuations, any organized players would ensure that their inventory is hedged. So they would be hedging either on the MCX, or they would be hedging by taking gold loan from the banks. There would be some inventory which is prepaid. The duty would be already prepaid to the banks, and which could range between anything between 20-30% for a company to up to 60-70% based on how much of hedging is done by the company. So I think that those which are hedged on the MCX, there is a straight benefit, or I would say risk protection. And to that extent that it is bought from the banks directly, there would be some minimal impact. But the positive way to look at it is that the demand that would really rise up with the festive season coming in. We are towards the end of July. We have August, where Rakhi is coming in, and then September, October is the Dhanteras Diwali season. I think that consumers would be much more positive towards buying jewelry as a category, and the wedding season looks to be wonderful.
Okay, all right. So the street believed it's positive for Senco, and you're saying that yes, they're reading it correctly. But let's focus on the other stock, Muthoot Finance and other finances. They're under pressure. We have Mr. Muthoot who joins us on the show. Hi, Mr. Muthoot. Good afternoon, and thanks a lot for joining in. Well, the stock is under pressure. The street believes prices of gold will come down, which in fact could impact your growth as well as your book. Give us your first reaction.
Yeah, thank you, Prashant. But as I usually say, gold price is not the determinant for the gold loans. See, gold loan is somebody's need for money. And from the budget, I see that there is a lot of uptick in the MSME sector, a lot of business going in the MSME sector, the lot of credit requires for the construction sector, and also for the affordable housing. I think that should perk up the demand. Now, to talk on the prices, yes, when the tax goes down, the price of gold generally should come down a bit. But I'm sure in a week's time, 2 weeks' time, it will stabilize, and it's just a blip in the market. So that is the gold price. But of course, we are not very much concerned with the gold price, though, because the gold price is still very high, and people requirement for funds is better. So, but as the previous speaker was saying, there will be demand for gold will rise. People buy more jewelry, and finally, at some point of time, when they need money, they will bring the jewelry to the gold loan financiers for funding. So I don't think there is any huge impact. It's just a market sentiment which is happening.
So it will be business as usual, probably in a week's time.
No, perhaps, sir. But I think at a time when gold prices have been soaring, going through the roof, this relief on duty perhaps just lets you buy that little much more, right? On that, let me just go back to Mr. Sen as well. Mr. Sen, you did mention, a rough sort of impact in terms of, the grammage. Any sense on what the immediate impact on sales could be? Because this has happened before we, get into the festive season. So the timing in that sense is going to be good. It will all be sort of, once the budget is approved, it will all be put into motion. So your sense on the impact, let's say in Q3, which is when the peak season sets in?
So I think that, this 9% reduction in value will automatically enable a 10 to 12% increase in business beyond what we were expecting. Consumers would be like, anyway, thinking, procrastinating, postponing their purchase decisions. But the moment this has come in and the uncertainties continue to remain, the US elections are in place, the war across the world is still there. And, so those external pressures will always push the gold price upwards. So consumers should jump into the opportunity, those who have weddings towards the end of the year. And I believe that 10-12% increase in business immediately in a, I would say in a windfall manner or an unexpected outcome of this whole budget would be there. And if you look at the long-term part of it, we shouldn't miss out, as even sir was saying from Muthoot, that if you look at the agricultural sector, if you look at the way government is trying to support the women empowerment schemes, I think consumption overall would increase with infrastructure expenditures.
Right, Mr. Sen, if I can pin you down on numbers, you'd said 10-12% same-store sales growth, 20% top-line growth for the next 2 years. Will those numbers change?
See, those numbers would continue to remain. I wouldn't really,
you will have more confidence on those numbers.
But the short-term impact, say if we talk of July, August, September, I'm sure that there will be a short-term impact on the upside.
And you said about 9 to 10% perhaps increase in sales because of this relief that's come in. Gentlemen, thank you very much. It's a quick analysis and a very helpful one. Obviously, stocks are very excited. The market is excited when it comes to the jewelry segment today. Well, let's bring back Samir Arora into the conversation. He gave us that final warning in the final minutes going into 11 a.m. Something bad is going to come. But Samir, technically, maybe you can say something bad did happen. Yet look at the market's reaction.
I think, first of all, we should say hats off to our fund management and broker community. I think they should all go and learn from companies like ITC, which have been able to convince the government that, our smokers will stop smoking if you increase the rates, if you increase any duties, and therefore the government does not increase it on cigarettes. But our fund managers and brokers come on TV and say it's a one-day affair and a two-day affair. So if you keep saying that, the government will keep responding with higher and higher taxes till you say the fine balance has been achieved. But my first thing is, it's too early to say, because I remember 2018, which even the new guys in our market will remember. On that day, the tax rate was increased from 0% to 10% long term, and the market fell 0.2%. And then it fell some 15, 18, whatever percent, and the mid caps fell 30, 40%. So it's not like that. But what I'm saying is, this is hardly the day for us to say to the government that great thing you have done, because just look at it big picture. That we have, as a country, encouraged investment into gold. And the whole world, including India for 20 years, was saying, move away from gold and maybe even real estate a little bit to financial assets. So on the same day, we have increased taxes and whatever. But I have one more thing. I can bet anything that the long-term capital gains tax is going to 15% in February. Because you tell me in a big picture sense, let's say 20-year story, 10-year story, everything is frozen, that the capital gains tax is 12.5%. It makes no sense.
Yeah.
It could very well have been 10 in that case.
Yeah.
So you're saying it's going up to 15. But Samir, just very quickly, I think we'll have the FM speaking very soon. It's just, very, very quickly. So are you saying that like 2018, maybe we could have a delayed market reaction? But it's a very different market. Look at who's driving the market. 40,000 crores coming into mutual funds every month.
There is no delay. There is no delay. It can't be falling that much, obviously. That much it may not fall because that time you're right, there were less foreigners, more foreigners, this, that, whatever. And actually the 2017 rally was also very big. But to say that everything is okay when you've increased all the taxes, but more than that, broadly signaled that there'll be another hike in Feb, according to me, because 12.5 is an odd number to have. If it was only this, you might as well have kept it at 10. It would not have made such a material difference to the world. So the good thing is the fiscal deficit, which is a very good number. Yeah. The second good thing is any word you say about tourism, doesn't matter whether it's 1 or 2 temples or 2 places. Every day we should invest in tourism because it's the easiest thing to do. I don't know why that is not made the number one sector of India, not in terms of my stocks, but in terms of where we have to focus, because there is so much low-hanging fruit. Just clean bathroom, just put Wi-Fi, just put some security, some clean, and you have 1,000 places where people can go and they don't.
Got it.
But otherwise, it is okay.
Samir, you're telling us, you were telling earlier that more bad news, right? So 15% in February is what you're saying. And now, so direction of travel is higher, according to you. From a foreign investor perspective, how does it make Indian stock less attractive, or what's the comparison in that sense?
No, it's very obvious. I don't know why people come and say it makes no difference. Let us say pre-tax. Oh, everybody says pre-tax will make money. So we are, as a market, if you can just see last many number of years, the Indian market in dollar terms has been making around 12%. Okay. And other markets, the good markets, the bad markets have been making 6-7%, and the good markets have been making maybe, like US has made more, but let's say broadly 9-10%. They are not making 2%. So now on that 12%, we put an average tax. And please note, please let us not say that the long-term tax is 12.5%. There's a surcharge. It's about 14.5-15% even now. I mean, not now.
Right.
It was till yesterday 11.9. So it will become, say, 14 point something, and say half will be 20% plus some surcharge. So you are reducing 12-15% per annum from the 12%.
Right.
So you are at 10.
Right.
So how can it not matter? Please explain to how it cannot matter that the other market was giving, let's say, 9 only.
Yeah.
And we were giving 12.
Yeah.
But when we give 10 and they also give 9, then obviously relative attraction goes down. I mean, it doesn't have to come tomorrow morning, but it is bad.
Got it. No.
And for what end game? To subsidize gold?
Yeah. No, points taken. Samir, let's listen to the finance minister who's speaking, and then we'll come back to you.
One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we've worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were, I think, 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes. The capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some, it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore. And remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue as with many others outside of media also saying, are you considering it? Although it was introduced during the UPA government and it was introduced in 2012. 2 years had passed, and since after that when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the Nyaya Sahita, Bharatiya Nyaya Sahita and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211, backside. Yeah.
Hello, ma'am. Prakash Pedashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
Okay, well, that's the finance minister, and we'll keep going back to the FM as they continue to address specific issues, really, which have been addressed and which have been sort of announced in the budget. But Samir is back with us. Samir, okay, I think Samir will be with us in just a bit, and we'll be able to go across to him. I just want to take stock of the market, which is down 42 points. Market breadth is almost absolutely unchanged. I mean, 1,300 stocks are higher, and about 1,300 stocks are lower as well. You know, it's a long list of PSU stocks which are facing the brunt. They're down anything between 5 and 7%, along with, you know, a few others like gold finance companies like Manappuram, etc., which are selling off about 6%. Samir Arora is back with us. Samir, thanks for joining back. Just complete those points, I mean, that you were making. Interesting kind of direction you were going.
Sorry, I forget which one, but I was saying big picture, that if the system can understand and accept that, you know, if you increase duty on cigarettes a little bit, then the gross collections go down because there is a sensitivity and elasticity. At some point, they have to do that for STT stroke capital gains taxes, because just because our fund managers come on TV and say it doesn't matter, doesn't mean it doesn't matter. It matters. And there'll be that sensitivity at a point, but I think as an industry, we've been unable to convey that. Because the cigarette guys have been able to convey. That's why even when there is a need for taxes, cigarettes have been spared again and again. And we increased long-term capital gains by 2.5%. And I was saying one more thing, that 2.5%, and not just 2.5%, but the fact that it's a non-round number of 12.5% makes me feel that this is going up more to 15 maybe, or whatever, maybe 15 only. But it is definitely, this 12.5 is too much in between, and it's not a round number for it to be a long-term number for a long-term capital gains tax.
It's going up to a round number.
What I'm saying is normally taxes are not like this.
Yes.
That, you know, that's what I meant. It'll be rounded up to 15.
You know, we had
these numbers.
We had Ramdevji earlier with us who was talking about how dividends. He was comparing dividends and buyback. He was saying that, well, why should companies give out dividends now because of what is happening?
No,
I mean,
in fact, I heard that.
Yeah.
I think you guys clarified that it will be taxed as equivalent to dividend.
Yes.
So now there is no difference.
The arbitrage has gone away. But you know what? Another point that Mr. Ramdeo made was that capital gains tax can be handled as long as there is capital gain. Now,
this is all story. I don't do stories, please. Even though Ramdev is my friend, I don't do stories. What does that mean even? I don't understand. As if other markets are giving negative returns. They are giving lower returns than India. But it's not that they are negative returns. And we can't keep looking at China in that sense, because if you look at China from 2010 to 2020, it outperformed India.
Samir, you made the argument on, you know, dollar returns. Big picture, next 2 to 3 years. Okay, so big picture, next 2-3 years, you're saying that the Indian market will at best give you just 10% return per year?
No, I don't say that. All I'm saying is that every time we do this, we reduce the relative attractiveness of India. That is all I'm saying. And that matters. It may not matter in 1 year, but it matters. According to me, in the last 5 years, we may think India has done well, but it has mattered in the sense that the foreign flows have been less. And why should foreign flows be less? Why should both not be there? You are making it less attractive. And at some point, the STT has to be counted in the taxes collected from the capital market activity or whatever, stock activity. We can't have those two as separate, because the private equity guys are not giving... the real estate guy might be giving in some form, but private equity guy is not giving you STT. Then why should we compare our taxes with him?
Point taken, Samir. Yeah, I mean, there is taxation which has gone up, and you know, sort of made sense of a lot of that. Samir, thank you very much for joining us. It's a pleasure having you here, and hope we can speak again soon on some of these aspects. As views get settled, and you know, if there is any fine print, etc. It doesn't look like it. I think it's already pretty settled in terms of what has happened. We heard it from the finance minister earlier, and of course some of the secretaries there. But 30 points lower on the Nifty. We're at about 24,476 in terms of closing. Nifty Bank ends up 500 points down. That's a 1% cut. Doing much worse off as compared to the Nifty. 51,758 on the Nifty Bank. And I think the broader market will come up on your screen as well. The mid-cap and small-cap indices. Mid-cap index ends about 0.5% lower. and the small cap index ends 0.84% down as well. Lots of pockets of sort of stock moves. To be sure, some positive as well. Gold was one sector which was flying through the course of the day. Guys.
So Titan was up 6.5%. ITC was the top gainer. That also rallied 6.5%. Generally consumption. So pull up the Nifty FMCG index. That had a gain of 2.5%. Names like HUL, Tata Consumer, higher. IT, not bad. It's a nearly 3% rally coming through on Infi and HCL Tech. Those two heavyweights. On the losing side, cuts on private sector banks like HDFC Bank, IndusInd Bank, Axis Bank, Asian Paints on the back foot today, and Bajaj Finserv too, down over 1%.
Okay, if we talk about some of the gainers on the mid-cap screen, and apart from the biggies like ITC and Titan, you know, some of the companies that have exposure to Andhra, like NCC, for instance, 7% higher over there. Some of the travel and tourism plays like Thomas Cook have been up and about. Easy Trip about 5-6% higher. So those are some of the major ones. But otherwise, jewelry was shining bright from, you know, large caps like Titan all the way down to a Thangamel jewelry. Those are the stocks that were up and about. Team Lease and all the talk of upskilling. That stock was up about 12.5 as well. Quick check on PSUs, because that's where a lot of money was coming off. Look at Aircon, 7% down, Railtel, 5% down, RVNL, IRFC, Hoodco, NBCC. PSU party cooling down today.
Oh, that's right. There were a few more stocks that did well. Indus Stars was up and about in today's trading session. There was an official MSCI announcement that was out. Expected flows in the next few days, 24th, and it'll be effective from 25th out. So that stock as well did pretty well. Suzlon was up and about. That was up close to around 5% in reaction to its numbers. We'll speak to the management tomorrow as well. And MTNL, the stock, just in the last 1 month or so, has doubled. So that's the way that one has moved.
Okay, I think that's the market close, and it's not a bad close at all, but it is sort of, you know, the day of the budget, 30 points down and nothing. 24,476 is where the index is finally left off at. It's a wrap on at least the market programming here from all of us. Thank you very much for staying with us through the course of the day. But programming will continue. Lots of important interviews, lots of important interactions and perspectives continue to follow here on CNBC TV 18.
In income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
A roller coaster ride on Dalal Street as the Sensex and Nifty recovered in late trade after a sharp drop. Union Budget has hiked short-term capital gains tax to 20% and long-term capital gains tax to 12.5%. It's also hiked the securities transaction tax, that is STT, on the futures and options segment.
Real estate stocks slide as the sector loses the benefits of indexation, but long-term capital gains tax has been reduced from 20% to 12.5% on property. Short-term capital gains tax on property sale unchanged at 20%.
Shares of Titan and other jewelers rally after the government proposes to cut the customs duty on gold and silver from 15% to 6%. But shares of gold financiers struggle as the fall in gold prices is likely to reduce growth visibility.
Shares of ITC rally in trade as the budget leaves the tax on tobacco unchanged. A potential recovery in rural demand can also boost the FMCG business.
Well, it's been a busy day. Hello and welcome to this budget special. So over the next 30 minutes, we hope to wrap out everything which happened, what matters to you, what matters to markets, investors, corporates here, sector by sector, measure by measure, and we'll have our research team to help through the course of the next 30 minutes. I'm Prashant. With me, Surabhi Padya. Surabhi, hi.
Hi, Prashant. And the big headline was that hike in taxation. Capital markets did get a jolt, a dual jolt, if I may say, because capital gains tax has been hiked long-term and short-term, and the securities transaction tax has also been hiked. Let's listen into the finance minister announcing these changes.
Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients.
Well, that's essentially the finance minister announcing those changes. The market reaction has been quite incredible. If you've not been tracking markets and you're looking at things now, you will not know that some of these changes have happened, that equities capital gains taxation has gone up the way it has, because the market was, I wouldn't say unfazed, but there was only a brief reaction, very short-lived reaction. Nifty went down almost 400 points immediately after the budget announcement on capital gains, only to recover very sharply. And in terms of points, nothing at all. Nifty Bank was perhaps the bigger loser. And the Nifty, of course, lost a little bit. Mid-caps and small caps also coming under only a slight bit of pressure. We were talking about how the reaction to the election shock on the 4th of June, actually after the 4th of June was quite incredible because it was a one-day cut. And then, of course, the market rallied back onto newer highs. In this case, it's actually been even better if you just look at what has happened today, because absolutely nothing. If you didn't follow the news, just looked at the prices, I mean, you'd be absolutely... I mean, no one can fault if you did not guess that there has been some changes to the capital gains regime, really, which has come through. Lots of movers in terms of specific stocks and sectors, Surabhi.
Oh, absolutely. And topping the list today in terms of the way down was actually some of the larger banks.
Yeah.
The Nifty had a very flat sort of a day. The Bank Nifty was down about, 1% or so. But if you look at the rest of the market and where the gains were coming in, basically it's consumption and gold stocks. They were the toast of town. Titan 6.5% higher. Even smaller jewelers like Senko, Thangamal jewelry, all kinds of jewelry stocks are flying because of the reduction in customs duty. ITC was rallying because obviously there's relief. There is no change in taxation on cigarettes. And in general, a lot of the consumer names saw some takers because there has been that much more given at the bottom and the middle of the pyramid in the form of even some of the personal income tax changes. The other gainers of the day included like the likes of Infosys, HCL Tech from the IT pack. Like I mentioned, Lever, Britannia, Tata Consumer, these were the FMCG names that stood tall. What was noticeable was the PSU side of the market, by the way. The capex number remains unchanged from the interim budget, and it was a cool-off day for all kinds of PSU names, including Railways, IR, CTC, RVNL, and even some of the defense stocks. So those were some of the highlights. And by the way, tourism, didn't mention tourism. So if you look at names like Ease My Trip or Ixigo, the recent listing, or even some of the hotel stocks, delighted and jubilant because there's been a lot of talk about, further impetus, particularly on the religious tourism circuit in North India. But let's kick it off with the big shining story on gold. Gold financiers Muthoot and Manappuram were under a bit of pressure, though, of course, the gold jewelry stocks were up and about. Abhishek is here with the fine print. Abhishek.
Well, to begin with, in the budget, gold and silver basic custom duty has been cut to 6% that it was for 15% earlier. So there is a 9% cut on basic duty that you are seeing. And this can impact the gold price, which will begin to fall or will fall in the near future. So lower price related growth does not compensate well for gold financiers. Whenever prices decline, they get impacted, that there is not much of customer who would come and want to take gold loans from them. Gold loans typically do work well when the gold prices are on the higher side, because customer gets better value of loans or more loans on their same quantum of gold. So hence growth visibility actually reduces in the near future for gold financiers, and that is why there was this acted as a negative catalyst for gold financiers like Muthoot Finance as well as Manappuram Finance, although Manappuram has just 50% of its AUM with respect to gold financing. Back to you.
No, absolutely. Abhishek, thanks very much for that. That's helpful. I mean, stocks did well on the jewelry side and, of course, hurt on the financing side. Let's take a look at the real estate space as well. The real estate index tumbled over 3%. Sonal is here to tell us the key announcement which mattered for the sector. Sonal, take it away.
Thank you so much for that. Well, the biggest announcement was that the long-term capital gains, the rate on sale of property, that had been reduced to 12.5% to 20%. While it's a tax rate cut, the indexation benefit, that was removed, and that is something that worried the street. Now, indexation is nothing but an adjustment made to cost of acquisition, adjusting for inflation as well. This would mean that for legacy properties or properties which are really old, the gains would be higher because no indexation benefit would be available, ultimately leading to higher tax outgo, and that is something which was worrying the street. The short-term capital gains, they stay as is, and just for some context, that for properties, 24 months or more is the long-term capital gain period. Now, we spoke to a couple of experts and analysts as well. Niranjan Hiranandani, he mentioned that while the tax cut would mean better volumes or more interest coming in from the buyer for new properties, the legacy or the older properties, the sale here would mean lower gains for anybody because the taxes would go higher. Analysts and the other consultants, they indicated that this is a cause of concern because indexation benefit has been done away with, because the effective tax rate would still be higher without indexation, and that is the reason why real estate stocks, after that sterile rally that we've seen in the last couple of trading sessions, ended lower today.
All right, Sonal, got that. Thank you very much. So quite a roller coaster. And from the market standpoint, the critical question is that is it all over? Has the market literally digested this tax hit in one day, and whether it can move on or not? I think we'll have to wait for the next couple of days to get that answer. Well, as we take your leave, let's now actually go across to Shireen, because she has been in conversation with the top leadership at industry body FICCI, getting their reactions in on Union Budget 2024.
Joining me now to understand how the budget will provide more confidence to industry when we talk about investment and employment and the other growth-related measures are Dr. Anish Shah, the President FICCI and the Group CEO and MD of Mahindra Group, Anant Goenka, the Vice President at FICCI and the Vice Chairman of RPG Group, Uday Shankar, the Past President at FICCI and Founder, Marigold Park Capital Advisors, Cyril Schropp, Chair of FICCI's Committee on Corporate Governance and Corporate Laws and Managing Partner at Cyril Amarchand Mangaldas, and Dinesh Kanabar, member of FICCI's Committee on Taxation and the CEO of Dhruva Advisors. Gentlemen, appreciate you joining us here on the program. Anish, to you first. As we go over the fine print of the budget, and of course all of this will have an impact not just in the near term, but in the medium to the long term, especially on announcements that are still work in progress. What is the biggest takeaway that industry sees the government sending the message out?
Shireen, the biggest takeaway is, as you mentioned, continuity and stability in the growth agenda for the economy. We are very glad to see that the growth agenda continues. The focus on infrastructure, on capex, on skilling, manufacturing, agriculture, these are all aspects that are very positive for the industry and something that portrays well for India to be able to meet its Viksit Bharat goals.
But, speaking of some of those goals, and I think the big focus area in the speech, and she started her speech with employment as well as skilling, and that's been a point of criticism, and the government trying to combat that on a front foot. The three schemes that the government has put forward, and it hopes that industry will participate and partake in those. What is your take on what the government is trying to do to formalize jobs, linking these incentives to the EPFO, and basically asking industry to up hiring?